All right, everything looking good. We are live. Let's go ahead and get this stream started. Welcome back to the channel, Crypto Trend Trader, with our Friday morning market wrap up. It is 11 a.m. Eastern Standard Time on August 5th, 2022. And like always, before we do get started, it's important to remember it's not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research. And of course, trade responsibly. What's going on, Sohail? Good to see you. Another one. Thank you for being consistent and making these in-depth videos, man. The amount of value in them is amazing. Being part of your Discord is an honor to be a part of. Thank you. Hey, thank you, man, for the kind words as well. And glad to have you as part of the community and Discord as well. But that being said, let's go ahead and jump right in. So obviously we are at some very, very key levels. We've been talking about those levels over our last couple of streams in the group as well. Obviously highlighting what we're looking for and what could make or break this trend. What would lead to continuation, what would lead to rejections, and essentially how we expect the markets to move. So it's no secret that throughout the last year or so, at least this year, we have essentially seen TNX and DXY strengthening, and as the two of those strengthen, it's been causing some turbulence or downward pressure on equities, crypto, stocks, etc. We've seen commodities ripping to the upside. We've seen energy ripping to the upside, and we have seen the VIX at elevated levels, but as of late, it's been rather muted and looks poised for a breakdown. Same with commodities. We have seen them break down from key levels, and now we're seeing oil break down from key levels as well. We're seeing gold and silver also break down, so like your monetary and industrial metals represented. So what does all of this mean? Obviously, we're seeing inflation rising, depending on where you are or how you're calculating it. We have, record highs for the last, 40 years, etc. So what is the next big trend going to be? How are we going to take advantage of it? How are we going to protect our accounts? How are we going to grow our accounts? And, most importantly, just how to be positioned in advance. And then, of course, figure out when we need to cut the cord and admit that maybe we were wrong on, one of our theses or trades, etc. So that being said, let's jump right in. There are some politics obviously going on right now. We obviously have the Pelosi trip to Taiwan, which in my opinion is just reckless and completely unnecessary. I understand the old bag is getting ready to be voted out of the House. If you're not from the United States or don't fully understand U.S. politics, it's very important to pay attention to what's going on here, because if you're outside the United States and you don't necessarily understand exactly how the political structure is or the system is, which honestly, I'm not trying to talk down to anyone. You guys probably have a better education and understand our system better than actual people in the United States, because for the most part, and this is not an attack on Americans, but more the education system. Our education system is absolutely pathetic, and the things that you're supposed to learn compared to like the useful things that people learn, there's a huge gap between. So that being said, the United States has essentially three main portions of the government. Everyone's familiar with them. We have the Supreme Court. Obviously, we have the, Speaker of the House leading, both parts of Congress, and that's Nancy Pelosi. And then obviously we have the president as well. So all three of those are independent branches of the United States government, and theoretically like equally powerful. Now the president has like a tiny bit of sway, obviously, but in many ways, it's not that one person picking policy for the most part. But those, the Supreme Court, the president, and the speaker are all extremely, extremely powerful. Now, are they equally powerful? In some ways they are. In other ways, one body has more power than the other. But Nancy Pelosi is essentially obviously the Supreme Court, if we talk about them as essentially one entity, Nancy Pelosi is essentially, the representative of one of those three parts of our government, the same way the president is, the same way the Supreme Court is. So in all actuality, those three governing branches are essentially like equivalent in strength or power or whatever. In some cases, they're slightly different. But for, what amounts to one of our top, handful of representatives or leaders in the world doing something like this at such a key time. I mean, and I get it. It's like, oh, we got to show China that, we're not afraid of what they tell us to do or whatever. But at the same time, there's already quite a bit going on. So like maybe virtue signaling and potentially causing like mayhem for Taiwan, for the United States, for China, for just everyone in general, probably not worth it. Now that's fully my opinion. Nancy Pelosi can do whatever she wants, and I honestly don't care. The only reason I care is because, she's an important part of our government. So that being said, she's probably going to be gone very soon in the midterms. So in a lot of ways, this is sort of like her farewell, like I just do whatever I want. Also, maybe it was a distraction type thing because her husband just recently got a DUI. So he was going through court and everything. So maybe she's trying to distract. Recently, they've had, millions and hundreds of millions of dollars in stock trading positions. And, so is this just a big distraction thing? Is there tons of corruption? Is this to fulfill her own goals? Yeah, I'm sure. I mean, she's already made plenty of money. I don't think that there'll ever be any legal ramifications for like the trading or any of that stuff. Like, who cares? All I care about is like, hey, maybe if we're considering possibly like, that there could be like world wars taking place, or like there's a land war currently in Europe or something like that. Maybe just not the best time to like stoke tensions between Taiwan and China. But it is what it is. Again, I know a lot of people don't understand the importance of this, or just don't care or whatever. But it is actually like historically, I mean, in my opinion, one of the most reckless things we've seen. It's just absolutely ridiculous. Say something accidentally happened. God forbid something happened to, her plane or some other issue. She was attacked. Something crazy happened. I mean, it could literally stoke tensions. It might have nothing to do with China. Maybe while she's in Taiwan, somebody in Taiwan, who doesn't like that she's stoking tensions and possibly causing like instability in the region, decides to do something. Who knows? Who knows? Obviously now, thank God we didn't have a situation like that, but very, very important. And then meanwhile, we have a like last minute basically bill taking place. They're calling it the Inflation Reduction Act. And this is very, very important because whenever they name something like, the Freedom Act, like the idea is to like make it sound like it's going to help protect your freedom. But in all actuality, it's the opposite. So when you create a bill that's called the Inflation Reduction Act, and that Inflation Reduction Act is like somewhere in between $600 billion and $1 trillion worth of, government spending. Well, is that really going to cause inflation to come down? Now, this sounds crazy, and this is sort of circular logic or thinking, but yes, actually it will. And I know that sounds crazy because you were probably expecting me to talk about how stupid the Dems are and how in the middle of like record high 40-year inflation, the last thing we want to do is spend like, $1 trillion to try to cut down on inflation. Here's the reasoning behind it. Short term, of course, it's going to cause more inflation and more issues because anytime you go to spend money, we're already having worker shortages. We just added another 500,000 jobs. We're talking about high paying jobs because all the government does is overpay people, waste money. We're talking about, just gluts of spending. We know the government is completely inefficient. So for every $100 they spend, probably $5 goes towards like what they were supposed to spend it on, and the other 95 gets used up in bureaucracy because we know of the inefficiency of government. So that being said, short term, it's not going to help. The Fed is going to be forced into a corner even worse than it was because if inflation doesn't come down, which is not if we keep doing record spending bills, they're going to have to keep raising rates, and that's going to cause actual pressures, that really hurt the economy, the world economy, etc. So all that in mind, long term, I do think this will bring down inflation. And the reason I say that, and again, it's kind of circular logic and may seem like a little ridiculous, but the fact of the matter is, anytime you are taking money from the private sector and then spending it, or in the government is spending that money via taxes or via inflation, like borrowing money through inflation that eventually will be paid for. Whenever this is taking place, the inefficiencies are sucking capital out of the public markets or the private markets or just private sector, etc. So essentially, if I have $100 and I don't have to pay any taxes, there's no government, no nothing. If I have $100, I'm getting ready to spend it. I can spend 20 on a new piece of equipment. I can spend 20 on resources that I need to create my fidgets, and then I can pay someone, however many hours to create those fidgets. Now, if suddenly, let's say the government steps in and now we need to have a government employee, so we say, oh, okay, from now on, the government's going to take half of everything you make, and then is going to, regulate this, that, and the other, and it's all these like benefits that it's going to add. But in all actuality, now that $100 becomes $50. So I can only spend half as much on certain things. So maybe I don't get to hire that employee and I have to do it myself. Or one of my other employees has to make that widget. Maybe I can't afford that new piece of equipment, so manufacturing can't become more efficient because I have to do things by hand, et cetera, et cetera. So now just, extrapolate that times like an entire economy where, maybe 50 years ago or 100 years ago, the government was taking 5% or 10%, and then they were spending that. And then now you look at the government and look at what government spending in relation to GDP in the United States, and it's like 50%. So for every $100 that's coming in, the government is taxing that, and then they're spending what amounts to 50% of GDP. And we know that government spending is inefficient at best. So if that was like private sector doing that spending, they would get exponentially more productivity out of it. But when government takes that money and spends it, we get basically nothing for it. We have projects that go on for decades. We have all kinds of regulations that stop things from getting built. We have overpaid employees. We're paying people, $1 million to design a trash can that's going to cost $20,000 to stop, people from piling up trash on top of it, or like a bench from, we're going to spend $100,000 on a bench in San Francisco, Nancy Pelosi's district, and the bench is designed so it's uncomfortable, so homeless people can't sleep on the benches, so that when other people go to use the benches, there's not a homeless person. I mean, just ridiculous, stupid, retarded things that no normal functioning business would ever do because they have to worry about profits. So that being said, this Inflation Reduction Act, short term, I think is going to fuel inflation and put pressure on the Federal Reserve to actually do more, which they're already doing a lot. So the last thing we want is them to do more, because that's going to eventually crash the economy, which is their goal. They've said that. They don't want to crash it. They want a soft landing, but they know that it's going to lead to, unemployment and expensive capital, et cetera, et cetera. So sure, short term, it's going to fuel inflation. Long term, it's going to bring down inflation. I honestly believe that. I mean, anytime you have government spending more and more and more of your GDP, you're going to be less productive. So on paper, sure, it still looks like everything's fine. But in all actuality, the government, and this is the most important thing of this whole thing, and then we'll go to do some actual TA, but I think it was important to actually talk about this because no one's talking about important factors of these things. It's very important to pay attention to what happens long term with government spending. The economy becomes less and less productive because the government does a poor job allocating capital. So if you have $100 and the businessman who needs to make a profit to continue running a business has to use that money, he's going to use it in a more productive fashion. And then if you have the government taking that same $100 and then spending it, they're going to get much less productivity out of it. So the net productivity for that $100 and how it's being spent is going to be much, much worse when the government spends money. We have a ton of people in government that have never worked in an actual business or an actual job where they had to like make money or be efficient or do anything productive. So a lot of these people are like career politicians, etc. So they have no actual grasp of normal basic business or economics, etc. Same with the Federal Reserve and all their pros. They're all like economists and they have all this like book knowledge and everything, but they've never actually operated inside of like a functioning economy, in a business, ran a business, saw how changing small things can affect it, the butterfly effect of business. So when it's all said and done, the fact of the matter is, the more government we have, the less, useful the economy is, or the less productive the economy is. So if we keep spending money like this and we keep going further into debt, we not only need more money to service that debt, but then also we have less productive economy. So if we grow the economy and then 50% of that growth gets eaten up by government spending, we've really only grown the economy by, half as much as we thought, which is why essentially they've had to run this quantitative easing since like 2000, 2008. And we've essentially been on this path down to zero rates because free money is the only reason we're able to expand, because government has gotten so big that it's using up so much of the resources that actually the GDP would be declining if it wasn't for the easy money policies. So sure, we had 2 quarters of declining GDP, and sure, people are fighting about, well, this isn't technically a recession because look how strong jobs are and da-da-da. Sure, anytime you manipulate anything excessively, it's going to look like a little shady. There's going to be a couple things that don't quite line up. We're like, oh, that's weird. Last time I got a flat tire, there was a nail sticking out of it. This time there's no nail sticking out of my tire. That's crazy. So I guess this isn't a flat tire now because there's no nail? Well, no, it doesn't work like that. Like, you manipulated something else. Maybe like you took, the government went out there with a pair of, pliers and ripped the valve stem off of your tire. So then once you rip the valve stem out, all the air leaks out. And you're like, oh, well, there's no nail, so it can't be a flat tire because every time we've had a flat tire, there's a nail in my tire. And you're like, well, it could be the fact that we manipulated the tire. And you're like, what do you mean? And you're like, well, somebody ripped the valve stem off of the tire. And you're like, oh, okay, yeah, that could also be why we have a flat tire and then why there's no nail. So whenever we manipulate these markets and then we try to use our regular indicators or regular metrics and then we say, well, this is different, so therefore we can't be in a recession. Well, sure, the tire's flat, but it's not a regular flat tire because the valve stem got ripped off instead of a nail in the tire. So that's kind of how you look at these metrics. So sure, you manipulate enough things and it's easy to argue that things are different this time because unemployment's still low or whatever. No one really gives a shit about if we're officially declared in a recession or not. No one cares. It's a great thing to fight over. It's like, oh, you're changing the definition. It's always been the same thing. We always have had declining growth GDP. 2 consecutive quarters is a recession. And then months and months and months later, finally we hear officially whether or not we're in a recession based on all of these like complicated metrics. But by then it doesn't matter because we're either in the recession or out of the recession on the other end, etc. So none of that shit really matters. It's just something for people to argue about. But when it's all said and done, it's really just about productivity. If the world's going to expand, if the world's going to be better in the future, which is what the whole system is based on, everything is basically a gigantic Ponzi scheme, that we need more productivity over time, which means we probably need more warm bodies in the labor force worldwide over time so we can grow world GDP. And if that's not the case, which we know there's a lot of pressures on, growth of population, productivity, etc., we're going to, into the future, have a worse world because everybody knows. Look at China as a perfect example. Look at what has happened in China over the last 10, 20, 50 years. Look at how many people have been lifted up out of poverty into the middle class. That is because their productivity has gone up. It's because their manufacturing has gone up. It's because their GDP has gone up. So it's obvious to most people. But if GDP is going up, if productivity is going up, everyone's doing better that's part of that system. So sure, the rich are getting richer faster than the poor are getting richer, but at least the poor have, a place to stay, 3 hots and a cot, whatever the argument is. So when it's all said and done, it's about productivity. So when you hear people talking about things like, we're going to try out a 4-day work week, or, we're going to do work from home a certain amount of days per week, or we're going to start having people work 32 hours instead of 40 hours. When you hear all that stuff, that should be like an alarm going off in your head saying, hey, how is it going to affect productivity if everybody works 4 days in a week? What is that going to look like on GDP? And the argument will always be, well, I'm going to get more done because I'm going to be less stressed out, or I'm not going to be suffering from burnout, or whatever that argument is. And you know what that is. It's all just woke bullshit from lazy ass people. We know for a fact that if you can get 5 days worth of work done in 4 days, assuming equal hour work weeks, we know for a fact that you could just handle more work. You could just get an extra day worth of work. And then productivity goes up instead of down. But if you do less or the same amount, but in 4 days, I mean, it's hard to argue that we're not going to be losing productivity. If literally everybody on Earth just worked 1 day less, productivity would go down substantially by probably around 20%. So anyway, all these metrics, everything going on right now, I think in the end, the most important thing that everybody should just push all this other stuff to the side and just look at it like this and say, okay, in order for equities, whether it's crypto, whether it's stocks, whether it's commodities, whether it's whatever, used cars, houses, whatever we're talking about, in order for the value of these things to be going up in real terms, productivity has to be going up. Because if productivity is not going up, then demand is going to be slowly coming down. So then it's the dynamic between supply and demand. So it's important to just watch all that stuff and say, hey, going into the future, is the world going to be more or less productive? If we go into a world war, is the world going to be more or less productive? If we go into deglobalization, if it turns into East versus West, is the world going to be more productive? Are things going to cost more expensive if everybody has to manufacture their own semiconductors versus Taiwan manufacturing? And when we start looking at like the big scope of things, we realize everything is extremely, extremely complicated. And the more times we put our finger on the scale, or the more we like alter some of these metrics, the more complicated it's going to be, and the more clouded, the vision is going to be. So that being said, let's jump right into these charts and take a look and just kind of keep that in mind in a broader sense, how all of this affects what's actually happening, like the economics of it versus like, the actual like prices of goods, services, etc. And then look at the big picture, because the big picture that everybody's trying to spin right now is actually like, hey, things are actually like really good, and like probably going into the future, things are going to be like amazing. It just seems bad right now. But obviously we know, we're one bad decision away from, probably some life-changing events. All right, so let's take a look at what's going on here. What's going on, bullies? Good to see you, Yoda, and obviously Sohail. All right, so looking at the TNX, so we got a little pop back up here, trying to come back on top of the 8 and 21. Close up above those levels, and consolidation would lead to the bull cross again. We're doing that from the bearish control zone with multiple green histograms. We have the slope line is red and below the zero. So it looks like we're basically front running the 200 exponential and simple slightly. If we fail right here and roll back over, we likely touch down and hit those levels. If we don't, obviously continue up here, close above, and then we're going to flip this back bullish, and we would expect bullish continuation, which seems most likely in like the short to medium term. And then obviously we're at 2.85% right now. We know like the target or official Fed funds rate, relation to that, we wouldn't expect a strong inversion between the 10-year and the overnight Fed funds rate. So even if we do come down a little bit more, we got to look at it as there basically being a floor. And part of the reason why we saw some weakness in this was, essentially the market or the mainstream media or whoever, the bulltards, whatever you want to call them, essentially like trying to, the narrative for the last week since the Fed meeting has been basically the Fed just pivoted, now they're data dependent, and everything's going to go up because they're going to stop hiking. But that's obviously not true. I mean, you have to be an actual fucking moron to have watched that and thought, oh, that's it, they're done hiking rates, so they're just going to go from multiple 75 basis point hikes in a row to just no more hikes, and actually like we're probably just going to cut. So people say the market's efficient and all this stuff, but now all of a sudden we have a bunch of Fed people coming out saying, hey, actually we're probably going to do 75 again, and other ones are saying, well, actually like we don't have nearly enough data and there's probably not going to be any data before then. And then other ones coming out saying like we're probably going to do 75 basis points, we definitely didn't pivot. Like the fact that we have to come out and say that just tells you that the idea of the Fed and forward guidance is like an absolute joke. They're like, we're no longer going to do forward guidance. And then after like we do our little like press conference or whatever, I'm going to realize like the market completely misunderstood what I said, because I was trying to like coddle them. This is Jay Powell speaking. I was trying to coddle them into thinking things aren't as bad. And then they took it the wrong way and thought like actually things are good. So we'll see what happens here. But the fact of the matter is, I still expect TNX to go much higher. I still expect the Fed funds rate to go much, much higher. And honestly, we're probably headed up to like a 4 or 5% Fed funds rate. Let's be real. And, you know, passing $1 trillion bill or $650 billion bill, you know, Inflation Reduction Act, let's be real here. I mean, that's going to cause more inflation, which is going to make the Feds fight even harder, which means that they're going to have to raise rates even more, which means the pain is going to last even longer. I mean, so when you just extrapolate all of this, and then by the time we finally get everything under control and the economy slows and there's no more inflation, then we start really feeling the pain of all of the government waste. So next we have the VIX. Obviously the VIX is doing some important things right here. So we're basically like broken down or at the bottom of the range, the blue channel right here, or support, the white channel, and then obviously the triangle. Historically, you know, we have been operating above the heart line of our horizontal channel. So as long as we're above that heart line, we're at like elevated levels. If we look basically like historically, look back, you know, from 2012 to basically that Rona pump right there, 2020, for the last 8 years, this was, you know, the entire time we're in the bottom half of the range. You know, obviously, like you see the heart line right there, and then we see, you know, the green area at the bottom. I mean, look at how long we spent inside of this range right here. I mean, we've basically just been in this range for, you know, what did I say, 2012 to 2020, right? Yeah, so about 8 years. And the VIX was operating essentially between 10 and, you know, around 20 for that amount of time. So this period right here, since then, we've been operating in the higher portion of the range, the top 50% of the neutral area. So a breakdown out of this area into the bottom of the range again would likely give us, you know, especially if we start consolidating down there, would likely give us a similar situation to what we saw from 2012 to 2020, which was, you know, essentially just casual grind up in markets. And then while we're up in the top of the range, it means, you know, there's obviously more people buying puts, downside protection against their positions or speculating. So as long as we're up in the top part of the range, we would expect, you know, obviously volatility is a little higher, probably has something to do with a little less comfort in the markets or more skepticism towards like the future. Therefore, we can expect that, you know, probably markets aren't just going up to new all-time highs and just cruising, because when that's happening, no one's buying downside protection. So then when we zoom back in here and we look at what's taking place, we see obviously we're at the heart line, we're at the bottom of all these key levels. So if we break down from here, we're going to start approaching, you know, the bottom half of the neutral area, which tells us probably that the markets are just cruising back up. So again, if we break down from this level, that's going to correspond probably with the S&P, you know, Dow Jones break up above the 200 exponential and simple and continuation of the bull trend, likely back to all-time highs. Now, that's the opposite of my base case. That's actually the last thing I think is going to happen here, but definitely a possibility. I think more likely, this is actually just basically trying to, I don't want to say like trick people into thinking we've had a breakdown, but sort of lull them to sleep with comfort, and then all of a sudden we see a big gap up, spike, whatever. I mean, and the fact that we've come all the way down to that neutral level, just back up to resistance, we're talking about 61% move in the VIX. Now, what is that going to translate to? I mean, you can kind of compare it to these last couple spikes right here and see what did these spikes in the VIX look like in comparison to price action. So anyway, we're close to closing a weekly outside of this, even though it's not doing what I think will happen, which is basically a bounce back into the range and continue to like chop around. You know, it's important that if we do close this weekly down here outside of the blue support, you know, we have to respect that as like a technical breakdown. So we're basically at that level. We're on top of the heart line. We're on top of the 200s right here. So this is a very strong support you would expect to hold up. But also when we kind of look at the trend right here on the weekly and everything, it's not crazy to think this trend is about to flip red. And actually we are going to break down. So we have to have an open mind on this. My base case is actually that we get a bounce here, a push back up to the top of the range, and then maybe from there we get rejected or start to see a different picture. But as far as I'm concerned for right now, you know, we're basically at do or die on the VIX. I mean, if we break down from this level, you know, you're not going to be able to argue that we're still in this range. I mean, we're very close to losing everything as far as support right here. And that's good for the markets. If we break back down and we go back down into this cooling level, we're likely getting a melt up. Things are fine. Volatility going down, which means probably markets going up. But definitely at a very crucial area, the heart line, all the support, the 200s on longer time frames, very, very important level. All right, so next let's take a look at oil. So obviously oil, we got the breakdown from support as we've been discussing as a possibility. Obviously, we would expect support to act as support until it doesn't. So we talked about the two scenarios. One was our breakdown and measure move of the channel or descending triangle, however you want to look at it. And the other was, basically bouncing the range back up and then either lower high, higher high, etc. But essentially like chopping sideways. So it's pretty clear now. We have broken down, obviously. We got half the move. We broke down through support. We got a lower low on closes, daily, weekly, and monthly. And then obviously we lost the 200 exponential and simple. So we have key fibs below us that we're paying attention to. We have this ascending support of the ascending broadening wedge. We have the measure move right here. So we have plenty to pay attention to. Obviously the first level we're looking at is like 83 roughly. And then after that, the measure move around 77. And then depending when we get there, somewhere around this green ascending support of the channel, somewhere around like 73. We've been discussing basically this whole entire time. Everybody else is calling for $200 and $300 and $500 barrels of oil. We've been discussing how we expected oil back in the, high 80s, then low 80s, then high 70s, then low 70s, and possibly high 60s. We don't know how low it's going to go. I'm still massively bullish on oil long term, but I think it's pretty clear, especially when we look at longer time frames, that look, we had a big oil spike and probably oil is done for right now. And I know people are going to say, well, I don't get it. More supply didn't come online. So does that mean there's going to be less demand? Is it strictly supply and demand dynamics? And the fact of the matter is, to some degree, supply and demand dynamics will always be a thing. But we have to keep in mind that rampant speculation fuels things much higher than they should be or much lower than they should be. If no one was speculating, we wouldn't see big spikes to the upside and big spikes to the downside. We wouldn't see oil go to zero if this was just people who need oil. This is speculators cause these massive spikes. This is speculators cause these big spikes right here. So when it's all said and done, you have to keep in mind that sure, supply and demand are definitely factors. Sure, fundamentals and technicals are definitely factors. All those things. Everything's a factor for sure. But please do not forget about rampant speculation and how much this plays. Because that's part of the market dynamics is the speculation. And there was a time when futures was designed not to be speculated on. It was designed, to help farmers be more efficient or get the funding they need to plant their next set of crops or, whatever it is. That's not the case now. People aren't locking in futures contracts to make sure that their farm has sold a bunch of their wheat. So if wheat prices crash all the time, they're not going to have a net loss and then lose their farm. That's not what most people are using futures for or speculate, these markets for. So that being said, did oil top? Well, we don't know yet, but when we look at this, this looks pretty toppy right here. We had a pretty big spike right here, and now we've had 3 big red candles in a row, wiping out like 3 or 4 of our green candles, losing the 8, getting ready to backtest the 21 at like 83. And then obviously you guys know the targets are like 72 for the 200 simple or 63 for the 200 exponential on the monthly. We have 2 red histograms. We got a hard sell. We left the bullish control zone. The Stochs are angled to the downside. Everything we talked about potentially happening in advance since calling the top before it even happened is happening now. So this looks a lot like this right here. We break down to the 21. We lose the 21, and then obviously we break down from key levels. 821 cross the downside. We backtest the 200 exponential and simple. We're looking at something similar to that. Does it have to happen? No. Are we being proven right in real time once again? Yes. So, we got extremely bullish at oil, way back in the 40s. And, since basically that bull trend has played out, we rode oil from the 40s up to, 114 is what I was expecting at the top. We made it slightly higher than that. And then since then, we saw this distribution pattern taking place. And, you know, now we're breaking down from that. So we're losing the 821 bear cross, likely to get the push back down here. Again, still very, very bullish on oil long term. I'm sorry, I might have said monthly there. I meant weekly. Still very, very bullish on oil long term, but definitely looks like we have some downside to retest some of these key levels before going much, much higher. But it does look like we're going to cool down. And then you're like, oh, okay, well, if oil prices come down, then that's going to ease commodity and energy prices in general. So then inflation's going to come down. So then everything's going to be gravy. Sure. I mean, just for the record, though, you know, whenever we got these massive spikes in energy, which we were calling for way before it happened, we then were in like recession shortly afterwards, and oftentimes went into like a depressed period of like, you know, 6, 8, 10 years. So Dow Jones is next. So we see now basically we've gotten the push up here. We're back testing the 200 exponential, and we're not doing anything. The most important thing we're paying attention to is, 1, we're putting in a lower high right here. 2, we're spending a bunch of energy doing nothing. And 3, all we're doing really is reverting to the mean or back testing resistance. You know, this was clearly resistance, is clearly resistance. We're pushing back up to it. And not only are we not technically reaching it, but we're definitely not breaking above it. So definitely should be some, like, you know, alarms going off in people's heads. And then here we have basically our top right here. And then we came up and topped again at that same level. So we have basically a high right here. And then we have a slightly higher here or same high here. So basically, we're printing some mild bearish divergence, depending on what indicator oscillator you look at. If we come down and look at the TDMACD, we see the difference. This was our first spike right here. This is our spike right now. The first spike was slightly higher. This one is obviously, you know, we see this peak right here corresponded with, you know, 33,000. This peak right here is exponentially bigger. And again, corresponding with like 32,000, slightly less. So we really have to pay attention to the daily bearish divergence presenting itself on these charts. And in all actuality, you know, we talked about this well in advance. What did we really do here? We bounced. We got a dead cat bounce off the 200s. Back testing, trying to get back above the 821 so we can get across back to the upside. Last time we attempted it, we got to move up here. We went sideways for a couple months, and then we rolled over. Is it going to happen again? I don't know. We're building a little bit of momentum right here. Looks good. You know, did that likely already play out and now we're getting ready to roll over? We'll have to see, but seems very, very likely when we look at the monthly. Basically, we capitulated on the monthly right here. We predicted a back test in advance, and that was obviously the big move we got in July. We back tested. We made it exactly to where we said, in between the 8 and 21. Now we're consolidating. The market is basically saying right now, hey, everybody, cast your votes. And by cast your votes, I mean either buy or sell stocks, because when the voting's all done, we're either going to go up from here or we're going to go down from here. And it's very important that you vote with your wallet, because that's going to determine the direction. So if everybody buys here, we move back to the upside, we confirm back into a bull trend, and it's all gravy. If everybody sells here, we capitulate down from these levels, we start to retest key support. We don't know what's going to happen, but we know historically, if we do get this cross, it's followed by a disgusting sell-off afterwards. But there are situations like this in 2015 where it looks like we're going to get the cross, and then we actually go into a bull run. So we don't want to mark that off as a possibility, but it's worth taking note to. And then while we're here, actually, I just want to point out that period we were talking about initially. This is 2012 right here, January 2012. This was 2012, okay? And then from 2012 to 2020 is what we were paying attention to. So if we go back here to, so this is January 2012, and then this is, you know, 2020. In that time, we went up 123% over that, you know, whatever, 8 or 9 years, 8 years. So that was the period we're paying attention to. So it's worth note that, you know, in reference to the VIX, let's just zoom out here again. It's worth note what that looks like in real life. So this is when the VIX is depressed in the bottom half of the neutral zone, which is the black area right here is the neutral zone. The red area is obviously, you know, extremely elevated, and the green area is extremely depressed. So while we're in the neutral zone from 2012 to 2020, the market just melted up. And then this big spike right here in the VIX is what corresponded with the big sell-off. And then as the VIX has melted down, we see what has happened in the prices. So again, this is that area where we had depressed volatility and the market just melted up. This is where we had a spike in volatility and the market melted down. And then this was elevated volatility as we continue to move up right here. And then obviously now we see what looks like potential topping. And then again, if we break down from the 821 right here, we would expect this breakdown to correspond with a pretty big VIX spike sometime in the near future afterwards. Now, if I'm wrong, if my base case is incorrect, which is completely fine and actually makes my life, all of our lives, exponentially easier, at least investing wise. If we're wrong and the VIX breaks down from here, likely we reclaim the 821, chop around for a bit, and then we're at new all-time highs before long. So that's actually the bull case scenario, is the VIX actually does break down, the market consolidates back above the 821 on the monthly, and then we actually go to new all-time highs soon. So we don't want to say that that's not a possibility, because it is a possibility. But we know what needs to happen before then. We know exactly what it will look like in real time, one step at a time, and we have it laid out, 10, 12, 15, 20 things that will happen on every time frame from, the 4 hour, the daily, the weekly, the monthly, leading up to that series of events. The same way we've been able to essentially pick up the breadcrumbs and figure out exactly what was going on in advance and position for it for the last, couple years with all of these different runs we went on. This is the next big one, because crypto run is fun, commodity run is fun, housing run is fun, but we're never going to make money on the scale that we will on the stock market. So if this breaks back into a bull trend, we start going up from here, we reclaim the 200 exponential and simple, we confirm back into a daily bull trend, then the weekly bull trend starts looking good, then we reclaim the monthly 8 and 21, then it crosses back bullish again, and then everything's gravy. I mean, there's a bunch of steps. We're going to see it happening, and we just continue buying into strength or adding into bullish momentum as the markets move in our favor. But right now, we have moved back up to resistance, and now it looks like, I don't want to say we're topping out right here. We could be topping out right here. We could get a big spike to the upside, and then that's like essentially a failed breakout or throw over, and then we go lower. So I don't want to say like, hey, there's no way price goes any higher than here. But at the same time, we'll pay attention to these key levels and see what the charts are telling us. And right now, there's no reason we can't just move up right here. I mean, earnings season hasn't been that bad. We got another spending bill coming down the pipe. The Fed pivoted. Everything's good. I can't imagine why anyone would be skeptical that we're just going to go back into like euphoric melt up. And for the record, that was sarcasm. So SPY on the daily, we're seeing the exact same thing taking place here. We have a much higher high here on stochastics. We had the same high, but essentially just different form of bearish divergence taking place. All we need to do to invalidate this bearish divergence is just break above the previous high, break above the 200 exponential, maybe test the 200 simple, something like that. Obviously, we see bearish divergence here as well. A very large histogram peak right here, and then we see just this pathetic little lump right here. So essentially, exact same thing. We're looking at the exact same thing. And then if we go over to the weekly, again, what are we looking at? A dead cat bounce off the 200s, a back test of the 821, trying to consolidate above them and cross this back to the upside. If it fails, we roll back over and go to a new low, much, much lower. If it consolidates and saves the trend, we likely see a situation like this and then continue on up to new all-time highs. Obviously, momentum building on the weekly, but also, we've had like 5 or 6 weeks worth of bullish momentum. So then SPY on the monthly, obviously doing the exact same thing. We came up exactly to the level we said. We're now threatening the 821, trying to avert the cross. One of two things going to happen. We either avert the cross and probably headed straight to new all-time highs, or the cross happens and then we get a capitulation move back to the 200 exponential and simple. And we know obviously last time that happened was 2008. Before that was 2000. So again, we see what that would look like if it happens. And then again from 2012, when that VIX was in the bottom portion of the range, like January 2012 was like right there we go. And then all the way up to 2020. And again, we saw 164% move to the upside over that like 8-year period. So when the VIX is depressed, we see just the melt up taking place. So right now, while the VIX is still in the top of the range, the likelihood of the melt up is much less, but it doesn't mean it can't happen, because we saw that melt up happen while we had elevated VIX. So elevated VIX is not necessarily a bad thing. It just means we're going to get big moves up and down accordingly because there's people betting both ways. If everybody's on the same side of the bet, there's nobody being wrong, which is what this just steady grind is. Everybody's just bullish because all we do is go up. So there's less momentum to be able to be built because a lot of times like the move down and then people start shorting and then they move back up and they have to close their shorts. So those sellers become buyers now when there's already a bunch of buyers. So it propels price higher. Well, if everybody's just a buyer, there's no shorts to get squeezed. Same with when everybody's a seller. So on the SPY again, very close to that breakdown. If we lose the 821, we're headed down to probably like the mid 200s, 250, something like that. IXIC, NASDAQ, backtesting the 200 exponential, backtesting the 236. Again, very, very clearly, what we're seeing right here, the difference being on the NASDAQ is we did take out that recent high right here. So the NASDAQ has been more bullish as of late. So we don't have that same divergence taking place. Now, if we see divergence on the two main indexes and they break down, the NASDAQ will in fact break down as well. Much less important. Russell, again, we see the divergence taking place right here. But, I don't look at the Russell as an indication for what the markets are doing. I look at the markets for an indication of what the zombie index will do. All right, so into our sectors. So XLI, again, we have the back test. We have the divergence. Everything looks exactly the same. A lot of these charts look exactly the same. Is it just a complete coincidence that literally every chart and every sector of the stock market basically looks the same? Or is it just a back test of resistance and then everything is kind of making its way to resistance? Something's overperforming, something's underperforming, and now actually we're getting ready for that continuation. This was just the dead cat bounce, and now the dead cat bounce is almost done playing out. We're just seeing like the musical chairs kind of going on right now. So there's still like 20 chairs. So when we take one chair away, it's not like a big deal because there's still 19 more. And by taking a chair away, I mean like something that had a pop like is unable to maintain that pop. So it pushes back to the upside, back test key levels, say like Walmart, and then just melts right back down to where it was before. So is that going to happen? Well, we'll see. We'll see what happens with Bed Bath & Beyond. Just had a 28% move today. We'll see if the 28% is sticky or if it was just a pathetic garbage stock that's complete trash, that has a horrible balance sheet, that is completely zombie and probably going away very soon. But in all actuality, people were just speculating because it had the same setup and all the other setups have already played out. So we're just kind of like bottom feeding right now for like the crappy setups that we didn't take before because they were worse, on the assets that we didn't bet on before because they were worse. But like actually the trade setup probably will play out if this move is still taking place in time. So that's what I'm looking at right now. It's basically same trades over and over again, the backtest of a 200 exponential and simple. But the truth is you're just expecting at any point in time that actually this whole trend just rolls back over and the trades you're waiting on to pop off, like the Netflix, like the Targets, they just never play out. So we'll see, but that's my base case. We're seeing it happen now in real life. XLI, backtesting those key levels, clearly still in a bear market. So what is this? Just a bear market backtest before continuation to the downside, in my opinion. XLF financials, absolutely pathetic, underperforming, well below the previous high, clearly printing massive amounts of bearish divergence in a bear trend, complete trash. XLB, so we see healthcare obviously holding up much, much better. My bad. Over time, I let these like completely get out of order. XLB, so materials, again, complete underperformance, trying to back test key levels, not seeing that same divergence because it's just such a pathetic move right here. We see a peak and a lower peak. We see a peak and a lower peak. We see a peak and a lower peak. So we're not printing the same divergence, but also this thing hasn't moved. Just to be equivalent to what everything else is, it's got to be up another like 8% or so. So we see clear underperformance in industrial. So, is that a indication of what's to come? Yes, probably. Because think about things like industrial materials, any kind of like manufacturing or long lead time things, how long it takes to actually be reflected in the economy. You know what I mean? Way before you get your widget at Walmart and Walmart sees a slowdown in people buying widgets. Way before that, we see changes in like the actual manufacturing, production, materials, the inputs. So XLY, consumer discretionary, backtesting, the 200 exponential. Again, seeing that peak down here, higher peak right here. So we're not seeing that same divergence on this, but essentially just backtesting resistance clearly in a bear market. XLC, complete underperformer, by far the worst sector. Again, just complete underperformance. We're not seeing that same divergence. I guess technically we are from this peak to this peak, but in all actuality, the most important thing to pay attention to here is everything else has bounced, at least some attempt to get back up here. This is just dead, hanging out at the lows, complete garbage. Obviously, people are not bullish on communication. So then XLK, tech has a nice move up here recently. We looked at the NASDAQ. We see basically we're trying to reclaim the 200, printing some higher highs on price action and histogram. So again, no divergence right here, backtesting key resistance. And then on to real estate, again, backtested at 200, slightly lower high right here, printing some bearish divergence right there, starting to get rejected already, likely rates. And, you know, obviously, I mean, there's a lot of headwinds for real estate. All right, and then on to consumer staples. So real estate being the first of our like kind of safety sectors, and then consumer staples, utilities, and what did I say? Healthcare? Yeah, I missed healthcare. So XLP breakdown, reclaiming the 200 exponential and simple, by far one of the healthiest charts, because not only have we not had the confirmation of the bear market yet, other than like, you know, a couple days right here, but we haven't actually like broken down. We're not back testing red 200 exponential and simple. This is our initial back test before we even confirm into the bear market. But holding up okay for now, neutral between the 200 exponential and simple, but doesn't look good. And keep in mind, this is, you know, one of the safety sectors, one of the ones that's supposed to look better than everything else. So then XLV, healthcare, obviously, again, safety sector, in between the 200 exponential and simple. We see they're working. They're doing their job. They're holding up. You're not making money on them necessarily if you've been holding them through this, but you're not losing, and you're not losing as fast. XLU, the recent move up in utilities was very, very big. Again, the final of our safety sectors, threatening the previous lower highs right here. Again, it does look like a lower high. It does look like we're going to print bearish divergence, especially if we come down to fill the little gap we left behind at 70. Again, holding up good, but you know, you're probably not getting rich in utilities, but you're also not losing, you know, 40, 60, 80% like Kathy Wood. So if she would have, think about if she would have just invested all her money in XLU, you know, she would have, I mean, she could have saved people like $20 billion. So XLE energy obviously been the best performing sector as of late, still on top of the 200 exponential and simple, but we got the initial breakdown, we got the dead cat bounce, underperformance, and then we came straight back down to 200 exponential and simple. So the two things we're watching right here is, we talked about the potential this already topped out at the 0.5 from the top to the bottom. 50% retrace, Charles Dow theory, very likely this is done, especially after the follow through. Now, we talked about the potential that we get up as high as the 618. It is still possible that we basically come in, put in a low, put in a high, put in a higher low, and then put in a higher high, and then we actually go lower from there. It's definitely a possibility. It's also possible, obviously, that we already topped out and we're headed down lower. So what's going to tell us one way or the other? So it could go up, it could go down. Fucking awesome. Thank you so much for sharing that. So what tells us if it's going up, or what tells us if it's going down? Well, if it breaks down here and takes out the low, it's obviously going down, and then we're looking for lower downside targets. If it puts in a higher low right here and then starts to creep back up to the upside, we're obviously looking for, you know, that 618 higher upside target, potentially even new all-time highs. We don't know what's going to happen. Obviously, seems likely, though, the way the market is, the way the economy is, obviously this being the strongest sector, after we saw a pretty heavy sell-off right here and, you know, essentially like down 30% in a couple of days, seems likely if we put in a lower high right here, which as of now we have, that it's probably because we're going lower. At which point in time, we'll look for our opportunity, we'll look for our targets to play out. You know, we've been expecting this peak, the back test of 200 exponential and simple, the retrace between the 0.5 to the 618, and then the lower low right here, which lines up with some of our like macro fibs. Because what it looks like to me has happened is, it looks like we've completed a 5-wave correction. We're coming down to correct not only wave 5, but the entire 5 waves, which likely takes us down to that 382 macro target. And then after that, we're probably going much, much higher. New all-time highs. We've got some really nice targets to the upside. But in the meantime, we're just focused on what's happening right here. And is that already done? Or is this right here? It seems likely, honestly, if I had to just guess, I would say it seems likely that it's already done. If we take this first leg right here, and then we say from where we topped out, where would that leg be? And this is basically just a textbook, just super basic ABC pattern, okay? We take our leg right here, our lead-in leg, or our pole, whatever you want to call it, and then we have our pole length down, that's our A, and then the B is the retracement of the A, and then from where the B tops out, we just reposition the A. We take another A and put it right here, and it's basically just another equal leg down. And oftentimes what you'll see is leg A will be the same as leg C, and then leg B will be the equivalence of either 50% or 61.8% retrace, which is either Charles Dow theory or Fib 618, the golden retrace. But we see in this case, if our target is right down here at like $55, and it just so happens if we take our lead-in leg and we put it at where it looks like we may have topped, and it just so happens to line up to the exact point that we're already anticipating as our target to the downside, which just so happens to line up with our, fibs either on the macro or micro scale, and all of this confluence for like previous highs and, key support levels from, back in 2019, 2018, etc. Seems very, very likely that based on all of these things that probably this leg C is going to be the equivalence of leg A, and it's already started, and it's just a couple of days before we take this out. So we don't want to get too excited. We don't want to say, oh, for sure that's what's happening, but we see a hard sell. We left the bullish control zone. We're clearly putting a lower high off of a key fib level, which is the 0.5 and the back test of the 236. We touch them perfectly, like to the penny, and now we see loss of momentum rolling over. Seems likely to me. So we'll see what happens, but I've been talking about the energy trade. This whole level up here, we hit our targets perfectly. We took profits on energy. We were talking about potential move up to 100. We topped out here at like 92. If we would have got to 95, we would have for sure got to 100. But since we topped at 92, been saying the whole entire time, this trade is extremely crowded. Everyone is in energy. Most of these people got into energy. Remember, we were talking about at the end of Q1, talking about how many people, how many firms, how many, whatever, family offices, investors, traders, whatever, we're going to be repositioning at the end of Q1 into energy so that it looks like on paper that they're positioned correctly, and that going into Q2, they're now going to be behind the trend and buying bags from people like me. Now, it's not necessarily the case on all of these things. I said the end of Q1. I meant the end of Q2. I'm sorry. Talking about how people are repositioning. Well, at the same time, other people that have been in that trade for the whole year are taking profits at those levels. So the people coming in now are basically buying the bags from the people that were in the trade in advance, which is always us. We're always trying to be positioned ahead of time, and then everybody else shows up and we're like, hey, we saved you a seat, jump on. And then we all ride out together, and I'm like, oh, this is my stop. And they're like, oh, really? You're not going to the top of the mountain? You're not going to the moon with us? And it's like, nah, I think I'm just going to stay right here. And then we get off the bus, and then the bus drives off a cliff. So we see, obviously, that's exactly what happened right here with the, June rollover and then pullback. So we'll see what happens here. I do expect continuation of downside. There's an awful lot of confluence telling us that's likely to happen. It corresponds, obviously, with everything going on. And then transportation. So we want to look at the, 4 horsemen. I'm not going to look at the yield curve inversion right now. We know it's like fighting for inversion. We need to really see just like the biggest thing for me on yield curve inversion or yields in general is we just need the next Fed rate hike, because once the next Fed rate hike comes, if it's 25 basis points or more, we have a technical breakout on the Fed funds rate effective or target. From like that 2018 high, at which point in time it means we're basically headed to like 4 or 5. We have a technical breakout. There's no arguing it. There's no saying, well, on the weekly we do, on the monthly we don't, on the TNX we do, on the, et cetera, et cetera, et cetera. So there's just no arguing it. It's just a big red stamp that says fail. And everybody's like, oh, failed the test, apparently. So as far as transportation, So one of our first horsemen, obviously, we see a clear topping pattern, a back test of a 200 exponential and simple. And we know, transportation goes into everything. So if transportation starts to top out, come down, etc., we know like it's very, very cyclical, and that's likely going to lead us into the recession or depression. And then obviously next we have semiconductors as well, XSD. So we've been talking about this situation for what looks like a macro top head and shoulders pattern. We made it up to the minimum target we wanted, the 236 back test. Would be nice to see it go slightly higher to the 200 exponential. But I mean, if this topped out right here, it would just look like a weak right shoulder and likely overperform to the downside. If it goes up slightly higher and we get a strong right shoulder, basically equivalence of the left shoulder, it's more symmetrical, and, probably just get a regular old breakdown. And if we just keep ripping up here, start threatening the high, we probably just go to new all-time highs. I think the important thing to look at, and that's our base case versus like, our bear case versus, well, really our base case is the bear case, and then the bull case is essentially like invalidation of our theory. So what invalidates us? What tells us we're wrong? Well, we back tested the 0.5. So if we make it up to the 618, if we make it up to the 200 simple, that's like the deepest retrace, or like the strongest retrace we want to see. If we start going higher than that, we hit the 786, we're probably going to new all-time highs. Now, there is a chance it would reverse right here and then roll over and it just overperform. But if we start breaking above the 618 with conviction, we're probably going to new all-time highs on semiconductors. If we top out right here, we're revisiting the lows. If we go slightly higher, top out right here, revisiting the lows. And that would be like 152. And then if we break down from there, we look at the measure move from the head to the neckline. And we got a bunch of other key levels in the meantime. Obviously, the 2020 high right here. Key fib levels. The green, 618. All that's around like 115, 116. And then if we see like the full on measure move to the downside, the macro 786 fib, etc., basically would be a retrace from the 2020 low, that Rona low. It would be a 78.6% retrace. So actually, we don't want to see it go that low. We would actually rather it find support right in here, because likely that can see continuation of the trend. If we start breaking down below that, we're really threatening like the overall posture of this trend. Because, we have a ton of support right here with the highs and the macro fibs, and losing that could be potentially detrimental to, the whole chart. But if we go from all the way at the bottom to all the way at the top, let me switch time frames real quick. We basically have this massive move that has been taking place since 2008 low, all the way to the top right here. Now, you say, well, is this maybe a 1 and that's a 2, and then this is a 3 and that's a 4, and then this is our 5? Or is this all just one big, leg up? Or is this the 1 and that's the 2 and now we're in the 3? I mean, we don't know for sure until we start to see some key levels. But one thing I like, I always look for confluence, and you don't know often until you start testing the tops. So if we go from the bottom right here to the top right here, so 2008 bottom to the 2021 top, and then we look for, was there confluence on the way up that we wouldn't have been able to see because we didn't know where the top was going to be yet. So if we don't know where to draw the top, we don't know where there's going to be confluence. So once we start looking like we may have put in a top, then we can say, okay, let's look if on the way up that those levels looked important. Well, here we've clearly found some serious support, and it looked like a potential head and shoulders right here at the 786, and then actually got back on top of the 200 exponential and simple and kept ripping. So a lot of people probably, missed this trade right here, and they were too stubborn to get back in, and then missed a massive run up in semiconductors over the next like 13 years. So we see clear levels at the 786. And then here, once we get to the 618, we back test it, we front run it slightly, and then we creep up here. Almost no resistance at the 0.5, a little bit of resistance at the 382, and then support once we break above it, and then support. So we're seeing a decent amount of confluence. And then here at the 236 resistance, and then slight support after we break above it, and then, obviously the potential top. So if this develops how we think it's going to develop, if this head and shoulders plays out exactly how we think it is, and look, it's not we're not always going to be right. We're just really lucky, okay? We just get lucky a lot because of the magic 8 ball, okay? But I'm going to tell you right now, eventually it's not going to work. The golden 8 ball will fail us. And when it does, we just have to be ready to adjust. Because it doesn't mean, oh, we failed now. We're never going to be able to make a successful trade again for the rest of our lives. Might as well just pack it up. Trading career's over. No, obviously not. Because we have position sizing. And even if we did blow out our account like a newbie, you just load back up and learn from your mistakes. Or just blow it out again and just do whatever. But obviously we're not doing that. So if we do end up putting in this topping pattern, come back up here, hit the 618, maybe we already topped at the 0.5, we come back down and start threatening these levels, break down from the 200 exponential and simple on the weekly, start threatening these key levels, the 618 fib from our 20 low, or our macro fibs that we're just talking about, initially the 236. Once we tag that, it's like, okay, we definitely have topped out, probably come up lower high, and then maybe we hit the 382 after that. We don't know how deep it's going to go. We don't know if it's even going to go down at all. We don't know what's going to happen. But we do know if it does, key levels to look at. We know what levels we're looking at for here. If it reverses, that likely we're right. We know if we keep going right here, likely we're wrong. And then we can position accordingly. So not crazy for me to think that in the next year, XSD semiconductor ETF hits somewhere around like $73, $74. And matter of fact, it seems very likely in the next few months that we're probably at like 112 to 115. And then obviously that's another one of the four horsemen. And, obviously with that energy spike, it's pretty much, the ceiling of the deal for the apocalypse. Because we can have semiconductors top out and not go into recession, depression. We can have, all these various things happen. Transportation can top out. We don't have to go into recession or depression. But if we see a massive spike, we can have the yield curve invert. Doesn't mean we're necessarily going into a massive recession or depression. But when we see all three of those things happen, and then we see a spike in energy, especially if it's 50% or more in a single year, that has always been followed by recession or depression. All right, so moving on to the DXY, the old dollar bills, yo. So we've been talking about this. At this point in time, it looks like we're trying to carve out like a short-term daily, like higher low, and reclaim the 821. Obviously, we've been expecting this. We're basically just back testing support, or what was resistance as support. No surprises here. Still extremely bullish on the dollar, on the DXY in general. So coming out of the bearish control zone, likely to get the cross soon. The knife has already crossed above the purple stochastic, so that's our first step. Likely going to see a situation like this where we get the bull cross back to the upside and then put in a new high, consolidate, and then keep creeping up here. One thing that's worth note here is oftentimes when we break down and we lose the slope, it flips red, and then we backtest it and it turns blue before we get to it. Oftentimes that leads to rejection. It's actually a very, very reliable rejection. Now on the strongest chart pretty much in existence, is that likely to play out as a rejection, or is this going to be like the one upset? Exactly. That's one of the strongest charts, one of the strongest signals, both fighting against each other. One of them is going to be wrong. In this case, the signal. And then again, we flip it back blue right here. We peak out and then we come down, and now we're seeing it's flipping blue again. So it's dangerous, because when that happens, it's basically saying like, hey, we actually sold off, but the price didn't sell off that much. Indicator oscillator didn't sell off that much, but now we're ready to go up again. It's like, well, wait a minute. You don't enter a NASCAR race and then go to the pits and then they give you just a little splash of gas and then you just hit the track again. No, you take a second and you let them refill your tank so you can do another 20 laps or 50 laps or whatever. You don't just go in and say, okay, that's enough for one more lap, I'll see you on the next one. No, you let it load up. So that's the danger in a situation like this is that we stopped to refuel, but we didn't wait long enough. We didn't do enough damage, whatever you want to call it. Now, it doesn't mean we're not going to break up here and go bullish, but it's definitely worth paying attention to, that as long as the slope is blue and we're underneath it, that there's definitely potential for a powerful rejection if we get back to those levels. And we could do both. We could go to a new all-time high, and we could push up here, get rejected, and then that's it. And the dollar just craters and it goes to new lows over the next 10 years. And that was it. That's completely possible. So we should look out for that. But in the meantime, very, very bullish on the dollar still. So Tesla, we got the remainder of the move. So most things, obviously the target was the back test of key fib levels at 200 simple as well. Like a newbie, I pulled my stop loss up a little too high and, you know, on the back test got stopped out. So it is what it is. Lost out on a couple percent, but you know, it's my strategy. Sometimes it's not going to work out perfectly. Other times it is, as long as it's working out more than it's not. You know, but in this case, we retested 900, which was our target. We see obviously Tesla has been very strong in comparison to other things. 200 simple is on top here. Most other things have been putting in lower highs and lower lows, like Tesla. And then when they came back up here recently, they retested 200 exponential, didn't make it to 200 simple. Now, Tesla had not technically confirmed into a bear market until the breakdown, and this is our first actual backtest of it. So what does Tesla look like? Tesla, the individual stock, looks much more like our strong indexes, our safety plays. It looks not quite as strong as utilities, looks a lot more like consumer staples or, you know, some of the other charts that have been holding up decent, you know, what healthcare, etc. But, you know, what's going to happen from here? Well, if we get rejected here and it rolls back over, it's, you know, we're basically just saying like, hey, we're probably in a bear market. And then we come up here. And then if it gets rejected, it's like, yep, we're definitely in a bear market. And if it doesn't, it's like, oh, that was close. Like we avoided that bear market. Thank God. That's what this chart looks like to me right now. So the real question is like, oh, thank God we avoided the bear market, or, oh no, we are in a bear market. Oh, new lows. And obviously you guys know I'm a strong believer in Tesla. Love what they're doing. Elon Musk is entertaining. Not a huge fan of billionaires, but also I don't like just hate people because they're billionaires. So give the man props for sure. Think this is a great company and it's going to do amazing things into the future. And if you're going to bet on one human being on Earth, it should be yourself. If you're going to bet on two human beings on Earth, it should be yourself. And then probably like Elon Musk, you know, because like his track record's probably better, but you have a little less control over it. So when it's all said and done, Tesla is huge. It's going to be huge. And I think if you buy Tesla right now at $900, like 10 years from now, I'm sure you won't be mad about it. Well, I can't say I'm sure, but likely you won't be mad about it. But the truth is, if it goes to 400 or 500 before then, you might not be able to hold on. You might be mad, etc. And that's my target, so you guys know. So NEO, China in general, / EV. Again, weakness, trying to find some strength right here. We talked about the potential for a retrace and just another higher low, and then actually getting back on top here and China looking okay. We'll see. A little early for that. On Baidu, we were able to actually flip the 200 exponential bullish slightly and then roll back over, holding up much, much better. Threaten the 200 exponential and simple. Again, if we put in a higher low right here and then get back on top of that level at like 147, I'm going to probably start getting bullish because it's going to look like we're reclaiming those levels. Now, we'll see what happens here, okay? We'll see what happens here. I mean, this could be a massive miss and it just melts down, or it could be, you know, amazing and actually like Baidu's just crushing it. And that's the last little drive it needs to essentially consolidate above the 200 exponential and simple and go into a bull market. Now, we'll have to wait and see. We just got the earnings on BABA. It looks somewhere in between. We backtested 200 exponential and simple. The slopes are still powerfully angled to the downside, not nearly as close to like that neutral level where we could potentially flip on blue, consolidate above like 120, and then go into a bull market. We do still technically have a low, a higher low, and then a higher low. And then we still have a higher high here from the previous high as well. So we're technically in an uptrend. Now there's a massive downtrend lead in, and then this is likely just our retrace before we go much lower. But it's possible we reverse the trend. And in order to reverse the trend, we know what we need to do. We need to continue to put in higher lows and higher highs. We need to eventually reclaim the 200 exponential and simple. And then once we reclaim the 200 exponential and simple, we need to stay above them long enough that they flip blue. And then after that, we can start saying, hey, look, actually, like China's in a bull market now. Like maybe it fails, maybe it rolls over again. But for now, we got to trust it. All right, so on to NVIDIA. So NVIDIA is still just an absolute dog. I mean, it's not bad. Like, let's be real here, okay? We got the majority of the trade. Being a little bit stubborn. Whatever. But like, really? I mean, really, NVIDIA? Really? We're going to take like week after week after week to get this pathetic move back to the upside, and then we're going to get all the way there, and we can't just get that extra 1.8 to 3.7% to just get our nut? Like, really, NVIDIA? Are you that much of a bitch? Just go. Fucking Pelosi bought it. Jesus. That being said, it is what it is. I mean, at this point in time, I told you guys I'm locking in gains on like pretty much everything, at least partially, just waiting for stuff to just roll over. If we start going higher and I'm wrong, I will gladly buy in to momentum at higher levels with, you know, much better probability of success. But NVIDIA basically just back testing the top of the channel. You know, we're so close to getting our nut at this point in time. You know, you could just pull out now and bust or wait it out. It doesn't really matter. But the fact of the matter is, this is just a back test. Essentially, NVIDIA confirming that we're in a bear market. So we broke into a bear market right here. We got this pathetic attempt at a back test. Didn't even get there. Now here we're potentially going to get the actual back test. Likely rejection, and then we go lower. Indicator oscillators are at like top of the range. Momentum in our favor. It just, I mean, textbook confirmation of a bear market before a continuation, in my opinion. AMD performing better. I mean, should have just took this trade, right? I mean, obviously we didn't know which one's going to perform better, but I think in hindsight, AMD, well, less of a percent, but got there a lot quicker. So, but AMD on that initial back test, we just saw what NVIDIA looked like. It actually came all the way up to 200 exponential. And then here it got to 200 exponential. Maybe this time it goes to 200 simple, maybe not, and prints this bearish divergence. You know, lower high on price action, higher high on indicator oscillator. But again, just looks like we're confirming into a bear market before we go lower. Intel on the race to zero. So new lows, gap down to new lows today. It is trash. It is trash. Intel is obviously trash. It's the complete most garbage thing ever. So good thing we're going to give them billions and billions of dollars to build semiconductor plants in the United States. Why don't we give it to one of the good companies? Why the trashiest trash one? You know, and I hate a lot on Intel, but just because of its performance. It's not because there's like anything actually wrong with the company. Just like, you know, how it's run and makes money, and like the pathetic price action that we've seen when it topped out back in 2000, and this pathetic trash company stock couldn't even get back to that level again. And now it's just completely melting down. And if only there was some way that we could have anticipated this meltdown, like if there was some triple bearish divergence or something that showed up on the chart that was basically telling us like, hey, on a monthly time frame, get ready, because Intel is a complete trash company. It's total garbage, and it's getting ready to melt down. And then obviously, you know, since that happened, you know, it's only been down, 43% since there, without any warning at all. There's no way anyone could have ever spotted that. I mean, unless you watch a stream, and then you would have obviously seen it way in advance. But that being said, complete trash company, complete trash stock, but it is down here, threatening support. Obviously, we saw that attempted bounce right here, complete failure, rejection. Stochastics are accelerating to the downside. So this thing is complete trash, and it's literally getting trashier by the day. Like the speed of its trashiness is accelerating. So is it going to hit a wall soon and just, you know, explode? Or does it get less trashy over time? I don't know. We'll see. Looks like we're retesting 200 simple next. $33. So, you know, I've been calling for that for a while now. We hit our targets now. So at this point in time, it's like, do I just get more bearish and say we're going straight to $30? Or do we assume that we're going to get some kind of bounce right here? I honestly don't know, because this is such trash. It should bounce from this level. It should bounce from around here. Should get some kind of pathetic underperformance. Normally you would expect from the high, you know, to the potential low. And again, keep in mind, this was in here in advance. This, like all these fib levels. And this yellow fib is just assuming that we bottom right here. If we don't bottom and we just keep going, we just extend it down to wherever we bottom. But just hypothetically saying we bottom right here, I would expect the bounce that we get to be pathetic. We were talking about 0.5 bounces is what we expect. Maybe even 618s for the golden retrace. Something like this, I would expect just the absolute most pathetic bounce. A back test of the macro 236 in green, and a back test of the 382 in yellow, which is the same level right here. Do we have to have that happen? No. Is it going to play out? I don't know. Complete trash. I mean, obviously. I mean, I don't have to tell you that, because you can just look at the chart and say, oh, wow, all this thing does is just go down and be trash. And I would agree with you. 100%. So at some key levels though, maybe we're gonna get ready to see a bounce soon, but obviously just garbage. You know, and you're like, oh man, you're like super mean to like Intel. Like, why are you so mean to Intel? And like, look at what. Let's look at like the monthly chart on Nvidia. So this is our like peak here in 2000 in Nvidia. Okay, so we get like a blow off top, retrace right here, and then like 2001 we put in a new high, and we constantly just put in higher lows and higher highs. So if this Nvidia chart was Intel, okay, if this was our Intel chart, we top right here, we would basically be like 20 years later, but we're like right here at like $2.33. So this is what Intel did. It did a blow off top right here in 2000 at $3.51, and then chopped around sideways, went all the way back down to lows, and it took all that 20 years to get back to like $2.50. But instead, Nvidia is at $188. So it went up by like 75x or something. I mean, what is that? I can't even think of the math in my head because it doesn't even seem right. Let's say from like 250 to where we're at now. Yeah, 7,460%. 7,460%. And that's Nvidia in the same amount of time. That would be the equivalence. But instead, Intel is just at a lower high still and rolling over. So, you know, I know people are like, oh man, you're like super mean to certain stocks, or like you're like really mean to Cathie Wood and Michael Saylor, or like, man, you really hate crypto. No, I'm just honest. It's just honesty. Like, I exposed Michael Saylor for being a fraudulent piece of trash moron and predicted that he would be underwater massively in his billion-dollar positions before long, and I was right, because he's a trash human being. So we can look at his track record, we can look at MicroStrategy, and we know, hey, this is a trash scam bag company. The guy got investigated by the SEC. He paid a massive fine, and he's a trash bag moron trying to essentially become the head of something that he has no, like, he did no work to build Bitcoin and make it what it is and great. All he did was jump on the bandwagon and tried to run a marketing campaign to make money off of. But he failed because he is a loser, bum, trash, piece of shit. But, I mean, that's just my opinion. Cathie Wood, same exact thing. Was able to anticipate and call that out based on her past history. She's had super shady dealings. ARK was started with money that she got from the Wang gang. Okay? I mean, what does that tell you? I'm not talking about Andrew Wang, by the way. I mean, if you have somebody that has done a bunch of shady stuff and their fund blows up and takes down, you know, a couple massive stocks because they had huge positions illegally failing to disclose, and then you're like, oh, and just so happens like that's the same guy that funded Cathie Wood and she has like close connections with him. Huh, that's weird. And then all of a sudden, billion-dollar inflows and blow off top and complete failure. I mean, the woman's been in the business for like 30-something years, and her track record is trash. And then she has like one good year because she went like all in on Tesla and Bitcoin, and now everybody loves her. It's like, dude, she struck out for a decade and then finally hit a home run, and everybody's like, oh man, let me put her on my team. Check out this batting record. And you're like, oh yeah, her batting average is like 120. Like, I mean, are you fucking serious? You don't just go watch one game and then bet on whoever hit a home run. And you're like, oh, that was their first home run. And you're like, oh, of the game? And you're like, no. And you're like, oh, of the season? And you're like, no. And you're like, well, what do you mean then? And you're like, ever. That was the first time she ever hit a home run. You just so happen to be here for it. And you're like, oh, okay, so that was a good investment. Obviously not. And it's the same thing over and over again. If I'm mean to a chart or I talk about a crypto in a bad way, it just means the chart looks like shit. Sometimes I think people take it personally, you know, especially those XRP people out there. The XR penises don't like it. All right, so on to Apple next. Apple is one of like the best stocks in the big indexes. Obviously, you know, Apple and Microsoft in many ways were, you know, Tesla on top of that too, or this bull run. I mean, if you look at the percentage of Apple and Microsoft in the, you know, Dow Jones, S&P, NASDAQ, all of a sudden you'll understand like, oh, okay. So as long as passive investing is a thing, as long as index investing is a thing, as long as, these major indexes are 10%, weighted, or, whatever, 7 or 5, whatever it is, depending on what we're looking at, it makes sense that as long as the general indexes are sort of strong, or as long as these couple stocks are sort of strong, that the whole market actually is being like propped up by them. As the rest of the money kind of moves around in musical chairs, Apple and Microsoft are just sitting there on their little throne, just watching the peasants entertain them. So Apple, very strong, reclaiming the 200 simple, but we know when the 200 simple cross above the 200 exponential, it means the trend is losing strength. We could easily have a situation like this where we still put in new highs, 200 exponential cross back over, we're still bullish, or we could put in a lower high or higher high, and then this rolls over. Looks super sketchy right here, like Apple's ready to top out, but again, it has completely overperformed pretty much anything else on this recent move up here. Google, pathetic underperformance. We obviously have this ascending channel right here. We obviously have the clear resistance in white. We're obviously butting our head on the resistance. If we can pop up right here, we finally hit the top of the channel. We finally retested 200 simple. This is our initial back test of the moving averages. We see here it was clear we were losing momentum. 200 simple on top, put in a lower high, roll over. This is a back test confirmation. We're in a bear market. Push up here. We're definitely in a bear market. We go lower. Or we reclaim it. We find support. And then it's like, nope, we're in a bull market now. Probably not, but it is what it is. On Amazon. And same thing for all these, okay? Apple, Google, Amazon, Microsoft, even, Meta, some of the other big names. We would expect them to hold on strong because a percentage of all the flows that come into these major indexes are going to be going into, these big names. So again, we talked about it in advance when these were all still relatively strong. Of course, as we're looking at Amazon, it's been a while since it was relatively strong. It was basically just chopping sideways for a long time. But essentially, we've been talking about how, like, if we lose these big important stocks, then the whole thing gets dragged down. If we suddenly see Apple, Google, Amazon, Microsoft, if we suddenly see some of these not doing so well, then we're going to really see the indexes under pressure. That's why if you look at individual stocks, you're like, this makes no sense. Individual stocks are down 40, 60, 90%. But the indexes are only down, 15, 18%. How is that possible? Well, because of the market weighting in these couple big stocks that are holding up. Because if you look at Amazon, like, sure, it got nasty there for a bit. But in all reality, from where we were to where we are now, we're actually like not that far off the highs, 25%. But when we dropped initially, we were down 45%. And Amazon is one of the stronger names. So again, we're back testing, key levels of what was support as resistance, etc., and probably going to roll over. But once we do, we confirmed into a bear market here and then went lower. Once we do, this thing's going to take some damage. That's not what we're seeing from like Microsoft and Apple. Google obviously a little better than Amazon, but not amazing. But when we look at, Apple above the 200 exponential and simple still looks phenomenal. So even though Apple was down at one point in time, off the highs, 29%, now we look at Apple and it's like, oh, we're actually only down 9%. So how much is this propping up the whole market? A lot. About, 10% of the major indexes. Well, maybe not quite, but, it's high percentage. So then Microsoft, same thing, slightly less bullish. Obviously, we're still below the 200 exponential and simple, but this is really just the initial test. And obviously, anybody that took, the Microsoft trade, congratulations on that one. Obviously, the gains are going to be much less because it stayed so much stronger. So we're only looking at like a 15% move here, as we're in NVIDIA, it was like a 45% move. Or in Ethereum, we were talking about, that like 75% move. But the probability of success on something like, Microsoft is exponentially more. So keep going here. So basically just back at resistance on those major ones. We see Meta, just complete trash here, hanging out at the lows. I think the only reason we're still watching this one is we're just waiting for that breakdown, which, obviously we've talked about it quite a bit, but we would essentially just expect Meta at like 120 to 124. I'm not convinced. I don't want to be overly bearish on Meta,
but I think there's a good possibility. There's an above zero possibility, probably closer to like 50% possibility. We're down 56% right now. There is I would say around 50% possibility that Meta never reaches all-time highs again. And I know that's a bold statement, and you're like, well, I don't know. That seems kind of crazy. It's a huge company, ad revenues, blah, blah. I mean, answer me this. Is Meta slash Facebook slash like, Instagram, all the other affiliate stuff, are these growing or are they dying? Are they getting bigger or are they getting smaller? Is there more young people coming onto these platforms or is there less young people coming on? Because young people coming on will grow it over time and, it can see further growth. But if we just continue the trend we're doing now and it's just old people and then the old people are dying off or not using social media or whatever, I mean, that tells me probably like this thing might legitimately be in a permanent decline. Now, it doesn't have to be the case, but we've had a lot of experiences in the past where what was the market leader and looked like, a titan that was never going to, be upset or lose, what happened? They go away. They go away. I mean, before we had Facebook, I remember when Facebook came out, before that it was MySpace. And when Facebook first came out, it was like, what is this trash? And then MySpace is dead a couple years later and Facebook is exploding. So is it crazy to think that something else, one of these other forms of social media, whatever it is, I mean, I don't know what people get out of Facebook, let alone what they would have to get from something else to be better. I thought Facebook was to like keep in contact with like, people from your past, like, friends, family, people you went to school with, etc. Apparently, Facebook is just like to argue about dumb shit with people that you like know or kind of know, and then like to also advertise like your trashy business that probably doesn't make any money, and like spam a bunch of people with it. That's like what I've seen on Facebook. I don't know. Maybe there's still something there, but I don't see it. So in my opinion, not crazy to think that Facebook dies, especially with this whole like meta pivot and just burning money like crazy. And I mean, we'll see what happens. But the monthly chart looks terrible. It looks absolutely terrible. I mean, it looks very clear. We've never seen what looked like a top like this. I mean, here it looked kind of like a top, and then we reclaim it. And then we rip to the upside. And that was basically your peak from 2018. And then here we have the Rona dump. Didn't even cross to the downside. And then here we have, look at this 821 cross to the downside. I mean, this is a straight up meltdown. We have never seen the stochastics, or I'm sorry, the moving averages this far away from each other. We have never seen the stochastics this far away from each other. We have never seen the histogram in negative territory ever on the monthly chart. I mean, this right here is textbook a blow up, in my opinion. Now, I could be wrong. You guys know I don't like Facebook. You guys know I don't like Mark Zuckerberg, okay? And the only reason I would ever invest in Facebook ever is just because it's part of major indexes. So that being said, is this topping out permanently and going to get completely wrecked going into the future and never going to put in an all-time high? I mean, my guess is yes. That's my base case. Now, 50% chance. So 50% chance I'm wrong. That's fine. A coin toss to whether Facebook goes down forever in the future or puts in a new all-time high. I don't like those odds. So we talked about the target trade. And now again, this is just a gap fill back test of the 200 exponential and simple potential, like, macro fibs, etc. I don't like that Walmart basically had that move and then just melted back down completely. I don't like how long this is taking, hang out at these levels. But let's be real. If we do get the pop up here, it's just going to be one of those Bed Bath & Beyond kind of like pops where it just explodes up, in a day or two, like 20-something%, and then probably just melts straight back down. Full on just scalp. That's all I'm looking for here. Does it play out? No, it probably fails. It probably melts down. And a matter of fact, could we run like a super tight stop loss on this and say, look, you know what? Matter of fact, if we break down from this level here and we take out that daily candle before it, I'm good. I'll get out of it at 160. Now, could that then turn into like a Tesla type scenario? Sure, anything could happen. But the fact of the matter is, the longer this takes, the longer we hang out here, the less probability of it playing out. But with the nice risk reward of like 8% risk with like 26% upside, you know, it's worth a shot at like, you know, 3 to 1. And then the other one we were looking at was Netflix. Again, same thing. This is where we're talking about basically the entry. We're at resistance. You know, there's one little candle up before that, but essentially we're looking at like an explosion to the upside, like 46% on a potential, you know, gap fill. Now, does it have to happen? No. And a matter of fact, when we look at these longer term charts, does this look just absolutely disgusting and you don't want anything to do with it? Kind of. I mean, Netflix, the 821 cross down here, the bounce off the 200 exponential, like looking for that like dead cat bounce back up, the back test of like the 821 before rejection and we go lower to the 200 simple. Doesn't have to happen. Could easily just melt down from here. But again, you know, risk reward, trade setup, worth it. You know, Netflix, not a horrible company. Again, is it going to put in new all-time highs though? I don't know. I think Target probably does well into the future. I don't think they're going anywhere. Something like Netflix, I honestly don't know. I don't think Netflix is going anywhere. But again, I don't know. Some of these companies are not going to ever put in new all-time highs again. I'm not betting it's going to be Target, but I'm not betting that it's not going to be Netflix. I'm betting that it would be, you know, Meta. Again, Target though, 821 cross, just disgusting meltdown. We're still well off of the 200 exponential and simple. And the truth is, you know, a lot of times we got the 821 cross and we didn't revisit the 200 exponential and simple, but we never revisit the 200 exponential and simple without getting the 821 cross. So as long as the 821 are cross bearish on the monthly, I full on expect I mean, we know for a fact the probability of hitting the 200 exponential or simple is exponentially more. Because without the 821 cross, it's 0. Because we've never hit it without the 821 crossing first. So once the 821 crosses, here we have 1, 2, 3, technically 4 right there. Fifth one technically right there. Sixth one, a seventh one technically right there. And then this is our 8th. So if we have 7 data points and 2 of those 7, it hit the 200 exponential and simple. I mean, it's not that bad. It's like a 20-25% chance, something like that. But it's worth paying attention to because I don't want to be holding for a 50% drop when there was a 25% chance we were going to see that 50% drop. I don't like those odds. But until the 821 crossed the downside, there was a 0% chance, or close to 0% chance we were going to see that move. So we got to be real careful here, with these 2 trade setups. And again, this is one of those situations where the longer these moves happen, we're going to see random things popping off and getting those moves. But the probability of this counter trend, like gap fill, back test of 200 exponential and simple, reversion to the mean, return to fair value, like that whole argument, like the percentage chance of that playing out in our favor goes down every single day. Every single day. So, if we're still looking for this to happen 2 weeks from now, I mean, I can almost guarantee you I have already cut and run and I'm out doing something else. So make sure you are fully aware of that. And obviously none of this financial advice. I'm not your financial advice. These markets are extremely volatile. Please do your own research and trade responsibly. All right. Jump in the chat real quick. Yoda says, a bottom feeder is an aquatic animal that feeds on or near the bottom of a body of water. Yeah, exactly. And that's exactly what I was referring to. Exactly. But thank you for sharing that definition because it perfectly encompasses what I was getting at. So looking at gold. So gold basically, what's happening here? We lost the 200 exponential and simple again. We got a nice little move back to the upside. We're already, printing bearish divergence. We broke down to support. We 100% hit our target to the penny. And then from that target, we fully expect a back test. From that back test, we got it. We came back to those levels. If we can consolidate at this level, we would fully expect a measure move break back up. Is that going to happen? I mean, I don't know. I'm not bullish on gold here. I do not think gold looks good. I don't like how the chart is developing. And in my opinion, no, not even in my opinion, it's a fact that if gold is going to look better, it's because the bulls have to do something. If the bulls don't do anything and we just go sideways, gold looks worse and worse and worse in my opinion. Now on the weekly, it looks likely we would get some kind of bounce from here. And this was our last bounce that corresponded with like a similar signature. But we may not see that. And then on the monthly, we're below the 8 and 21 moving averages right now. So if we just go sideways for like 2, 3, 5 months and don't even move, The 821 crossed the downside bearishly, and then we end up with a scenario like this. And we haven't seen a lot of these scenarios in the past. And when we did, they typically led to like years and like 40% downside. So I get that there's like this like strong fundamental case for gold, and everybody wants to get excited for it, and it's like protection. And as a physical gold investor holder myself, I get it. I completely agree. Gold should be going up right now. But also, let's just remember, people are dumb as fuck. They're stupid. They're stupid fucks. People are morons. They're brain dead retards. Okay? They don't care about gold because we're so detached from the purpose of gold that it doesn't matter anymore. In most people's lives, gold has never been relevant. It's had a couple like big spikes and it's like, oh, look at gold, it's going crazy. Wow, that's nuts. But like, you know, arguably, ask any person in gold and they're like, why isn't gold going higher? And they'll be like, it's being manipulated. Well, what makes anyone think manipulation is just going to suddenly fucking stop? Like, if that's your base case, is that gold would be much higher, but it's being manipulated. Well, what's going to stop the manipulation? The overthrow of all governments, the stopping of paper trading of gold, no more speculations, only physical gold is able to be purchased. Whatever your argument is, I don't give a shit. But until that happens, shut the fuck up. It's either manipulated or it's not. It's either going higher or it's not. It can't be manipulated and also going higher unless the manipulation stops. So what is my base case? The manipulation continues. Quote unquote manipulation. So what is my base case for gold? If the manipulation doesn't end, if something big doesn't happen in the near future, it's going to look like this. It's going to look like shit. And if we just, you know, pull our little tool and basically just mock up the breakdown right here and look at what's taking place right now, you know, what is that? That's the same breakdown. And then where does it take this to? You know, retest the 200 exponential or simple, dead cat bounce, retest again, lower high, and then we break down below it, and then we backtest as resistance, and then, you know, eventually maybe one day we go to new all-time highs. But, I mean, that's 2029. So just, maybe just be careful here. Obviously not financial advice. But it's one or the other. Don't be like, don't fight the Fed. And then it's like, oh, the Fed's stupid. They don't know what they're talking about. So who cares? Well, no. If we didn't fight them on the way up, let's not fight them on the way down. If we believe in gold manipulation and that's why it's not going up, well, then let's talk about gold manipulation and why it might go down. The bias in trading or investing is just absolutely insane. It blows my mind. Same with like crypto, with anything. So silver, absolute trash. Looks like complete trash. And the thing that blows my mind about silver is, like, one of my buddies literally was like, so what's up with silver? I heard it's on a run. Like, silver investors are complete retards. It blows my mind. They've got to be, like, crypto and silver have got to be the, like, least educated or, like, least intelligent group of investors in existence. With the exception of, like, maybe, like, somebody who buys, like, Beanie Babies or something like that. I don't even know. Because we literally melted down that previous high right here. We melted down 32%. We were down from, you know, almost $30 down to the teens. And then we get this move off of the teens that we expect up like 9, 10, 12%. And the silver community is like, silver's crushing up over 10% on the day. Like, just blowing out of the water. The bull run is here. And it's like, wait, what, retards? We're down 30% and we're up 12. So now we're only down, you know, 20 something percent. And it's bullish? It literally blows my mind. I mean, it's got to be the most uneducated group of individuals in existence, all on the silver train. Literally blows my mind. Keep in mind, this is coming from someone who loves silver, loves the potential of silver, has physical silver, invested in silver, speculated on silver. Like, but it just blows my mind. I mean, this is terrible. The weekly chart on silver is horrible. We lost the 200 exponential. It has flipped red. We're backtesting the 200 simple and getting rejected, likely going lower. Now, is there potential we get a bigger move up here and a higher low, you know, and a lower high rather? Sure, anything's possible. But again, looking at the monthly chart, what does it look like? 821 across the downside, dead cat bounce off the 200 exponential, reclaim the 200 simple, likely just keep melting down. I mean, I don't know. I don't see it. Whatever people are excited about when they look at the metal charts, I do not see it. I see the opposite. All right, so Aurora Cannabis. So the cannabis space did exactly what we've been discussing. We get a big push up here, and then it just slowly melts down. Again, just expect these things to keep melting down and keep trending towards zero until they don't. So very important to lock in gains wherever possible. Tilray, like always, looking slightly stronger. Got that earnings miss, and then it's been up since then. It's above the 8 and 21 at resistance. Next key levels to watch, somewhere around like $5. Another dollar move, 25% move to the upside. Could have happened in just a daily candle. Could have happened on Monday, sure. But probably goes lower. Matter of fact, I've been waiting on Tilray to go to a new all-time low. And at that point in time, I'll be really looking to build a position. But I have small positions in all of these pot stocks because eventually I do think they play out. And the risk reward from these levels is like asymmetric as it gets. You're like, okay, do we go to zero, which is only a couple dollars away, or do we go substantially higher? My bet's substantially higher. CGC Canopy Growth had a big day down today. I was trying to cross 821 to the upside again, failed. Had that gap. You know, it was looking like maybe we were going to try to fill it, but obviously just another lower high. Kind of squeezing into a range right here. So, you know, next pop up could take us to 350. If we break down below 235, probably going to new lows. Obviously, you know, the cannabis sector, we know what was going to happen here. So, oh God, this is terrible. So the estimate for CGC was going to be negative 22 cents in earnings, but they somehow lost $4 instead. So that's good. They missed by 1,728%. I mean, so it happens. I mean, you could be off by, you know, 20x. It's not that big of a deal. I mean, sometimes you miscalculate, right? And then for revenue, actually revenue is not bad. I mean, it missed, but the estimate was 87 million and reported was 85. So why did they lose so much money? Obviously, cost. If their revenue was what they were expecting and their earnings were down substantially, obviously they're having issues with cost, which makes sense, you know. So they probably have raised the prices but sold a bunch less product. So it makes it look like the earnings are okay. I'm sorry, it makes it look like the revenue's okay because they're charging more but selling less, and it balances out around the same. But they're charging more and they're still losing money because of either fixed costs or input costs, etc. You know, if they're paying a ton extra for, say, like fertilizer or lights or labor or whatever it is, you know, it's going to kill their profit margin. And I'm not really planning on getting like deep into these things, but I am kind of curious now that we're actually talking about it. Yeah, and this is what we were talking about. What we don't want to see is, look at the revenue, 60 million, 169 million, 280 million, 434 million. That's what we want to see, constant growth. And then here we see 415. So that's the last thing we want to see, is basically like growth, like kind of plateauing or maybe peaking. It is what it is. Obviously, you know, they've been pretty consistently missing. Yeah, we'll see. We will see in time. They were at 25% debt to asset, then 47, which is definitely a little high, and then they're at 35 now. So that is good. Basically took $1 billion off of their assets and $1 billion off of their liabilities. So not bad, obviously, as well. But we'll see in time. Yeah, I mean their operating expenses really haven't changed that much. It was 629 million, then $1 billion, then 880 million, then 878 million. Yeah, that's wild. I mean, a lot of their expenses are down. I'll dive deeper into that a little bit on my own time. I'm not gonna bore you guys with that, but interesting to say the least. So we'll see what happens, but obviously we don't want to see this We don't want to see the growth declining. This is till right now. Just to kind of give you guys a reference point, revenue was 43 million in 2018, and then it was 166 million, and then it was 513 million, and now it's 628 million. So, we grew from 166 in 2019 to 513 in 2020. So massive growth there. So the growth from 513 to 628 is decelerating, but at least it's still growth in revenue. At least it's still growth. Now, they didn't get any more profitable necessarily, but at least they're growing an important metric. Over time, you say, well, if we grow fast enough and, we lose less and less money, eventually maybe we'll be profitable. It's hard to argue that for a company that has declining growth in revenue. All right, so CGC we looked at. So CCJ, Cameco is still strong here, much stronger than the space in general. Basically just hanging on. It looks to me like this is ready to roll over to the downside. We'll have to see. Very close to or already printing bearish divergence. We are. So unless we take out this recent peak at like 27, we're going to peak. Unless we take out that peak, we're going to print bearish divergence. So we basically have a high, a lower high, a lower high again on the daily. And we have a high, a slightly higher high, and then a slightly higher high again. So we have triple bearish divergence because each time we're putting in a lower peak on price and a higher peak on our indicator oscillator. It's not as clear on the TDMACD. We just have bearish divergence between these 2 points. But on the Joule, we see it between all 3 points. So does that mean we have to just all of a sudden just capitulate and melt down? No, but if this is substantially stronger than everything else in the space, most of the uranium space looks more like this, where it's like, hey, look, we're putting in lower highs and we're under the 200 exponential and simple, and we're probably going to roll over soon with bearish divergence. As opposed to, again, we see CCJ on top of the 200 exponential and simple, still showing those same signs, but looking much better. GSG, okay, so we've been really watching this, commodities. Talking about this potential dead cat bounce rolling over, and now look at what's taking place here. We got the move down, we back tested the 382, tried to get up to 0.5, couldn't quite get there, and then rolled over. We got back down, the 821 have failed the bull cross, and now here we are back at the lows again. Arguably, we gapped down to a new low, so technically it was a new low. I like to go by candle closes. If you gap down and then open from that area, do you just go by the open? Could go either way. I prefer a close, but arguably, regardless, we at least tested the same lows. So if we go any lower, it's a new low and it looks bad. If we bottom right here, it's going to look okay and probably print some form of bullish divergence, and then we can maybe get a pushback up. But I think it's very unlikely we retested the lows and then we're going to just suddenly go to the 0.5 or the 618. I think it's much more likely that that was the big move up. It failed. Now we're retesting the lows and we're going to go much lower. Now we're at some key support right here. We'll see what happens. We have the 236 macro for this whole entire run up. This the whole commodity bull market that has taken place. We're like basically, if we break down from here, the next key support we have is the 236. So like 1973, and that's what seems likely. Seems like that's going to happen. Seems very likely that commodities have in fact topped out temporarily. I'm still massively bullish in the long run. Here's our weekly commodity chart. I mean, look at this. As long as GSG has existed since 2007, it's been in a down. Well, for a couple days, it was in an uptrend. Typically, that's the top when something like this comes online. And then after that, it's just a full-on meltdown. And now here we confirmed into the bull market on the weekly at like $15 in April of 2021. Obviously, we were very, very bullish on commodities leading into this. But now, it looks like, we're about to get the cross back down and probably back test key support. 200 exponential and simple, etc. And then on the monthly, again, same thing. We have basically just melted down. Now we're back testing key resistance. If we consolidate here long enough, or we start to build up with a bunch of lower lows and higher lows and higher highs, the next key level to watch would be like that 32 level, bunch of resistance through here. But it seems likely we're coming back down to at least retest like 18 bucks or something like that. Maybe we retest to 21, find support, and then keep trending up. Still a very strong trend, still very bullish on commodities, but let's be real here. You know, whenever we've gotten that hard sell and left the bullish control zone, meltdown, hard sell, left the bullish control zone, sideways, and then like much, much later, meltdown, and then again, left the bullish control zone, hard sell signal, you know, mini meltdown, lower high, massive meltdown. So what's going to happen off this one? Not crazy to think we're going to have, you know, a deep retracement back into like the $16 range. Maybe this is just a lower high and commodities just get cheaper forever. I doubt it though. I think people finally realize like, hey, wait a minute. Maybe like actual real shit that makes actual real shit is important. And we can't all just like bet on like, you know, SHIB, Inus and Dogecoins and cum rockets. Like maybe somebody needs to actually like do something useful in life. We can't just all speculate on digital useless garbage. Or maybe we can. Maybe we can. Maybe that's just the world we live in. We're just, who cares if people like make food or like shelter or, you know, like important stuff like that. If we create energy, who gives a shit? We don't need any of that stuff. If we can all just hang out in the metaverse and, you know, bet on cum rockets and Dogecoins and, you know, have digital virtual lives, we don't need food for that. I mean, there's plenty of crickets, right? We can all survive on like IV, like cricket tubes. I think that's viable. We could, I mean, if you want like a Matrix future, we could definitely be like slaves in the future and just live in like little bubbles and in the metaverse. I think it's viable. Now, is that the future we want? Well, maybe. I don't know. Your life probably is really shitty if that's what sounds good to you. Or maybe the metaverse is just going to be way cooler than I thought. I don't know. One or the other. But either way, like, probably should seek help. And full disclosure too, like if anybody needs someone to talk to or whatever, like I'm always, you know, willing to listen, man. I mean, definitely crazy times right now. So, you know, I appreciate each and every one of you in the community. And if anybody does ever need anything, you can always reach out to me. Now, I might not help you, but you can reach out to me. There's definitely a possibility I will. So that being said, copper breakdown, very, very bearish back test right here. And then confirmation it's a bear market. Dead cat bounce off of some key levels here. A lot going on right here. We're not sure exactly what levels we're using. It looks, I mean, the previous high to low right here is still getting a lot of play, but really the green bottom to top fib is what we're looking at, which basically was like just a massive channel to the upside, a huge like distribution pattern. A huge distribution pattern and then breakdown of the pattern. Is it possible to come all the way back up and back test it? It is. Seems unlikely though. We already came down to the 0.5. We're back testing the 382. So I don't think we're going to push up to 236. It is possible. It is possible. If we get rejected here though, we likely go to the 618. So like realistically, like 1777 or like $25 are probably like the key areas we're looking out for. We'll have to see. I mean, it's hard to believe we're just going to like melt down on commodities. But again, it's the same type of thing where like nobody gave a shit about like commodities forever, just like energy. And then all of a sudden they're popular. So as soon as they become unpopular again, is it crazy to think all the air comes back out of these things? Yeah, it's not crazy. I don't think it is at all. The real question is though, is like, do we put in a higher low? Like obviously we have like a double bottom right here. No matter how deep we come, we need to see a higher low. And then at that point in time, you know, I think commodities just rip to the upside. I'm still very, very bullish on commodities going into the future. Basically, anything that you could like, you know, like the old saying goes like, if you could drop it on your toe, I want to own it going into the future. So JJC, copper, these are all the same. UTZ, UT. So we've been talking about this one. This was one of the group members had presented this chart, and we've been talking about this trade setup, and we're seeing that continuation up to the target of like 19. After that, we'll look at some of the other ones, but we are doing something that we really like to see. I've stressed it in the recent streams, but typically the same way when we see the 200 simple cross above the 200 exponential, it's telling us the top is likely in, momentum is running out. Here we see the 200 simple crossing below the 200 exponential, or the 200 exponential crossing above the 200 simple, telling us like, hey, we're losing momentum to the downside. We're likely bottoming out. We then saw a higher low or double bottom, reclaiming 200 exponential and simple. We flipped them bullish. So it seems likely that at some point in time in the near future, we will roll over and get a back test for support. But that would be 100%, in my opinion, a buying opportunity, as this is confirming into the beginning of a bull run that could literally last for years and be like hundreds or thousands of percentage. These are the best trade setups we're looking for, value-wise, basically the flip. And then forward, we basically hit our target right here. Not convinced on this one. It was trading fairly technically in general. We took profits, obviously a nice higher level. We're already back at those, well, not quite, but back near those levels. Likely rolls over though. Didn't quite make it to the 0.5. Don't know if it's going to make it to the 618. I think the next key level we're looking for to the downside on forward is going to be something along these lines. I mean, we already almost made it there on the most recent push down. So, maybe when we get there, if we don't see like support, we'll start looking at like this level. But I think this is probably where we're going to. It seems unlikely that we're just going to like blast through all of this, because there was just so much consolidation in this level. I think this will act at least as temporary support if we get back down to it. But we'll see. We will see. But, like most of our trade setups, has already played out. All right, so let's take a look at our cryptos, and then we'll go ahead and wrap it up there. If you are watching, enjoying, make sure to like and subscribe. Really helps out the channel. Blah, 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 blah. Sorry, I'm just in the chat real quick. J-Hoff says, almost missed it. Dumb work, screwing up my Fridays. No worry, man. Glad you're here. Could you take a look at Atom USD on the Coinbase chart? We can indeed, my friend. I will add it to our cryptos. Oh, what was going on with Atom recently? For some reason, I feel like I heard them just talking about it. Did it just get delisted from Binance US or something? No, that wasn't. No, wasn't that Atom? Didn't Atom just get delisted from Binance USA? Is that the one I'm thinking of? All right. So, and that may not even be a big deal because it's Binance US. Not like it just got delisted off like all Binance, because I know Binance US has like some special limitations. So it may just be to protect their own asses and have nothing to do with or be a problem. And I may even be completely wrong. But for some reason, I thought I heard that. So Bitcoin futures chart. Okay, so we're in the danger zone here. So we're obviously bearish, very much below the 200 exponential and simple. We saw basically what looks like, in my opinion, a bearish reset. We saw it happen right here where price action trended sideways, indicator oscillators trended back to the top of the range, and then we melted down. Again, same thing here. Indicator oscillators have been trending up aggressively all the way back towards the bullish control zone. Meanwhile, price action has done nothing. Now you're like, well, it didn't do nothing. It's up, $3,000. Sure, it's up 15%. Who cares? The thing we're paying attention to is this previous peak right here and where the indicator oscillators were at, and then this peak potentially right here. And we're obviously very close to threatening the 821 cross. So this is very bearish, but we're trying to play a counter trend trade, which would be the bullish 821 cross. It got threatened right here. We reclaimed it. It's getting threatened right here. We're trying to reclaim it. What happens today, and then obviously over the weekend in spot markets, likely tells us, where this ends. Now, there's just air between where we're at and, like 28K. But there's no buyers. There's no buyers. No one's coming in to buy. So what does that mean? If buyers don't show up, we're probably going to keep going down. Bitcoin spot chart. This is a Bitstamp chart. Again, same thing. We are threatening the 821. I'm looking at this in the meantime as just a back test for a higher low. So since back here, we have a low, we have a high, we have a higher low, we have a higher high, higher low, higher high, higher low, higher high, potentially higher low. So in order for me to flip my short-term bullish bias in a bearish downtrend that is for sure bearish, we need to take out that low. So, or that would basically invalidate my bullishness. Like very short-term, very skeptical bullishness that has mostly probably already played out. But if we take out 21,258 on a daily close, we will have compromised the previous low, and then at that point in time, we'll have to pay attention to, like, are we still putting in higher lows and higher highs? I'm going to go down to the 4-hour real quick here. This is what I'm really watching. We're hanging on to the 200 exponential for now. The previous time, when we put in all these higher lows, we retested 200 simple. Not crazy to think we're going to retest the 200 simple again. We just want to make sure that we don't take out that previous low. If we take out that previous low, I'm going to be very, very skeptical, and we'll have probably lost the 200 exponential and simple, and likely, this is done. If we come down here, find support anywhere, including having already done it, and it's done, as long as we don't take out that low, I'm still going to be bullish, and we'll still have the 4-hour, bull trend starting. And we know for a fact, the daily is still very bearish, but the 4-hour is bullish now. We're in a bull trend on the 4-hour. The 200 exponential is over the 200 simple, and both are blue. That is a bull trend on a 4-hour, but it's counter trend, the longer time frame trend, which is the daily, which is clearly bearish. So it hurts our probability of success, but still the 4-hour is bullish. Now, all the other time frames, not so much. The 15-minute is like fighting to hold on. The 1 hour is like fighting to hold on, basically looking like a rejection. And then the 4-hour is bullish. So shorter time frames look okay, but also look at how much bullish price action we've had over the last month to give us that little bit of momentum. So for now, still bullish on the short term, still have open Bitcoin and other trash bag crypto positions, but very, very skeptical on continuation from this point and clear invalidation levels. If we take out this, if we break down below here, we don't take out the low, even if these flip red for a little bit, and then, we don't take out the low, eventually we get back on top of it, I'm still bullish. I'm still bullish. If we start losing a 200 exponential and simple, and we take out the low, I'm no longer bullish. So that's my basically line in the sand. Then we come out to the daily. It's going to correspond with the 821, obviously. Going to correspond with those same targets up to 28,000. Obviously if we get some massive move to 32 or 34,000, it's possible. Seems unlikely right now. We have used a ton of energy on our indicator oscillators, and we have gone basically nowhere. Seems more likely than not we're getting ready to roll over to the downside. Does not mean we don't put in a new high first. So definitely watching for that. Somebody asked me about the moving averages on the weekly time frame. I mean, we lost the 200 exponential, and it's red now, so that's very bearish. We lost the 200 simple. It's still blue, so that's okay. So on a weekly time frame, I would say I'm 50-50 on this. If we're between the 200 simple and the 200 exponential, we're neutral, because we're basically in between the two indicators of whether or not we're fair or overvalued or undervalued, etc. So it's okay now for the weekly to be on top of the 200 simple. I would expect strong resistance at 26.8 if we get up there, 27, 28,000, those same key levels. But in my opinion, this doesn't change my scope of anything that we've slightly reclaimed the 200 simple without the push up. Now, if we push up, then it's okay, there's some legitimate threat here. Right now, this just looks like a back test that overshot by a couple dollars and a bunch of bull tards getting excited. That's what it looks like to me. If we go to the weekly on the future chart, I mean, look at this. Does this paint a different picture? We back tested 200 simple and the exponential, and now we're between the 200 exponential and simple. So there's no upside potential without reclaiming the 200 exponential. There's no downside potential without losing the 200 simple. Which one is painting an accurate picture? And if we do get the hard buy signal and leave the bearish control zone, do we get a big push to the upside, or does it roll over and fail? I mean, we don't really know. We honestly don't really know. Most likely scenario, in my opinion, is we chop sideways here for a couple months and basically have a little push up, a little push down, but nothing changes. That's my base case scenario, is actually Bitcoin just does nothing. But we'll see. We'll see. If the stock market starts rolling over, this is going to look like the back test, and then Bitcoin gets rejected, we go much lower. And then if we just look at the monthly, again, this is still very, very bearish to me. We talked about the potential that this is the bottom at the monthly cross right here, but the indicator oscillators still look really bearish. We're below the 821, still looks really bearish. It's okay as long as we don't take out the low. So if we take out 20K on a monthly close, it starts getting like real bearish. Okay, so Ethereum, still haven't put in a new high yet. Still have a slightly higher target at 236 at 1863. Again, we got to pay attention to Ethereum. It's been the strongest this whole entire run. The indicator oscillators look exactly the same as Bitcoin. The difference is that like the moves up have been just slightly better, but everything else is essentially the same. Hard sell, left the bullish control zone, printing some potential divergence, or actually has printed bearish divergence from here. All red histograms, still blue slope, still above the 0, still above the 8 and the 21, trying to reclaim them. So looks okay for now. Looks okay for now. Bitcoin dominance. So we're at that key level, the yellow support line right here. If we break below this, that's when I say, honestly, altcoins just rip and we just get a massive big red candle that just takes us all the way down to the bottom of the range. So this is it. This is the line in the sand for Bitcoin dominance. If Bitcoin is going to be anything but a piece of trash, just another crypto, and then all like the trash altcoin, complete garbage, speculative assets just rip to the moon and just steal Bitcoin's market cap, that's what it looks like is going to happen. If we break down from here, Bitcoin is going to get wrecked and lose 3% of the market cap or 10% of its value relative to all of the cryptos. So what does this mean? Come rocket to the moon? Maybe. If we don't find support right here, all the trash probably just explodes to the upside and Bitcoin completely underperforms. I mean, and that would arguably, if we come down here, we'd be coming down here to a new low on the Bitcoin dominance chart. I mean, which probably corresponds in like either a big bull run for altcoins or like one last hoorah. Yeah, definitely some developments. I mean, every chart is literally at like a breaking point on like every asset right now, which is why this is probably the most exciting or important, like, I don't even know, month or 6 months, depending on how you want to look at it, in like most people's lives / history in the markets. So total market cap has done nothing. So we bounced off 200 simple. We back tested the 200 exponential. Again, we see there's no new money coming into the space. There's no actual money flowing in here. Any moves we're seeing in crypto is literally just people selling one trash crypto to buy another trash crypto, or selling one good crypto to buy some trash crypto, or selling some trash crypto to buy a good crypto. There's no new money. There's no new investors. No one's coming in here saying, oh, thank God, I'm buying the dip. Some people that were already in crypto bought the dip, like us. We bought the dip, but we also sold the rip. So what are we going to do now? We're going to sell the rip again, and this is just going to end up going lower. There's no new money coming in. We need new money. We need some money coming in. We need Michael the Failure to borrow another $1 billion and go buy some crypto. But you know what? If I loan somebody some money and then they lost like 30% of it, and it was in like, the billions of dollars, and they were like, hey, let me borrow some more money. I'll be like, well, don't you already owe me a bunch of money? And you're like, yeah, of course. And you're like, well, you didn't lose like $1 billion of the money you owe me, right? Well, I mean, technically, yeah, I bought a few $1 billion worth of stuff, and now I'm upside down $1 billion. But like this investment I'm about to make is going to be way better. Okay, so it's in your best interest to just loan me some more billions. And I'm like, well, I don't know, man. The $1 billion I loan you is already like a little sketchy, and you lost, the billions that I loan you. You already lost like $1 billion in value. So you're probably not a great investor. So maybe maybe I shouldn't loan you any more money. But what do I know? I mean, I'm sure, they'll probably do another funding raise or something like that. Crypto is just full of stupid ass people. And like that old saying is like, a fool and his money will soon be parted. That's crypto. For now. There's some good ones, but we don't know what they are. I mean, a couple months ago, Solana was one of the good ones. So people thought. And what has happened to Solana in the meantime? Every possible thing that could go wrong has gone wrong on that piece of shit blockchain. Every possible thing. It is literally trash. Avalanche, AVAX, getting wrecked right here, doing nothing, going sideways, still on top of the 821, still has some bullish momentum. Stochastics are rolling over. Arguably could be a bullish reset as the stochastics trend down, but price action goes sideways. So if they trend down long enough and then start going up again, we likely see a breakout. We do have some targets to the upside. Oh, I forgot. When I did the charts last time, I switched exchanges on accident. So let's just take a quick look at this again from the top to the bottom. All right, so we back tested the 236. It's acting as resistance. Next target to the upside is the 382. Arguably, from where we're at right now, is there a trade setup? Again, the probability of these trade setups playing out is extremely, extremely low. Because one, we're in a bear trend. So we're counter trend trading. Two, a bunch of moves have already happened. And it looks like we're very close to like the exhaustion taking place and us potentially rolling over. But also, we've stayed in this little range for the last few days, like pretty tight. So it sets us up for essentially like a really, really tight stop loss with some potential like decent gains. So ideally, normally, you would take your stop loss as the swing low. Obviously, it's not going to work right here. So we could use this little swing low right here, or we could use a little swing low right here. The most important thing is same as Bitcoin. Low, high, higher low, higher, I'm sorry, that was not a higher high, but higher low. Then we get a higher high here. So you could say this is just part of that move right there. So really we're looking at low, high, higher low, higher high, higher low. So next thing we're looking for is a higher high. If we take out this level right here, there's some chop in the way, but we likely hit the 382, the next key fib for the internal retracement. So we're talking about a 42% upside right now with a 6% stop loss. If you don't want to take the tight stop loss, or I don't want to take the tight stop loss, I can take a 14% stop loss. Still very, very viable. 3-to-1 risk reward ratio, 42.5% upside to the 382, or 13.39% stop loss for a 3.18-to-1 risk reward ratio. Or really, we get the real nut is this trade right here. This is the one you're actually looking for. We build up a little bit of momentum, and we get the reversion of the mean back test of 0.5. And that gives us 85% upside with that same, well, the way I drew it, let's just say 15% downside, and it's 5.7 to 1 risk reward ratio. Obviously, counter trend trade, but about double what we would need. So that's what I'm looking at right here. Does Avalanche hit these targets? Does it have a bullish breakout? And we make 45% in like 3 days? Maybe. Or it just rolls over and completely collapses. But as long as we have momentum in our favor, as long as we're like setting up for some of these and they have good risk reward ratios, we'll look for them to pop off. Solana has already broken down below the 821. Looks like it's ready to lose the trend again. It did fight and save the trend a couple times. But again, I'm going to tell you the God honest truth on Solana. I don't think I'll ever touch it again on a long. Literally everything that has possibly could go wrong has gone wrong on Solana. So there's like 20,000 other cryptos. Most of them are probably as bad or worse, but at least they haven't proven that they're trash. Literally every day, something different happens with Solana. Some new, hack or some other bullshit, something going on. I mean, this time it wasn't even technically Solana, the blockchain's fault. It was the wallets got hacked because of some exploit. I mean, let's just be real here. I've seen what should have been a good business and then it had poor management, or what should have been a bad business and it did well because it had good management. And Solana appears to be a business that is bad with bad management. So everything that can go wrong will probably continue to go wrong. And this will probably go down in history as one of the worst cryptos ever in existence. Something like that, though. So we'll see what happens. Consolidate inside this range. Maybe gets a push up to the 618. $53. Maybe you're just like, dude, you're so wrong on Solana. Solana's awesome, man. My boy, Chamath. Isn't Chamath the one who was involved in Solana? I can't even remember. Whoever it is that I love and worship because they're a billionaire is in Solana. And I'm just really sure that Solana's going to be a winner, and you just don't understand it. Even though everything that possibly could ever go wrong with this trash bag crypto goes wrong, and just on a regular basis. I mean, other things don't even get a chance to fuck up because Solana is so busy fucking up that it's the only thing anyone talks about. But maybe that's a good thing because they're just getting all the bad out now, and then after that it's all upside. So 35% upside to backtest the 618, 13.5% downside. If we break from the ascending channel, if we break below that previous like swing low or whatever, we don't want anything to do with it. But that gives us basically, like about a 3-to-1 risk reward ratio. Excuse me. About 3-to-1 risk reward ratio. Let's just say I'm completely wrong and Solana just starts going nuts, breaks out to the upside. They like whatever's wrong with the trash bag crypto, just all of a sudden it's good now. 65% upside, 12% downside, 5.3-to-1 risk reward ratio. I'm obviously not trading it. Solana is straight up garbage. Polkadot completely underperforming, just absolutely pathetic. It has literally done nothing, just going sideways here. Arguably, if it breaks up from here, I mean, I don't even know. You guys can go through and do all these if you want on your own. Hasn't even gotten up to the 236, so the next real target would be the 236 at like 994. If we make it to 994, call it $10. From where we're at right now, there's not really like a decent trade. You would have to essentially be looking at. The problem is this has moved up enough that there's too much downside risk and there's like no upside reward basically. So if we did, I mean, the ideal setup again will be say, okay, well, if we take out the low, we don't want to be in this anymore. Unfortunately, that's like 26% off the low. And then just for the back test is 58%. So 2-to-1 risk reward ratio with a massive stop loss, obviously not going to do that. So we would have to either use this swing here or this swing here. So this one makes more sense, obviously. But at that point in time, we're almost at the low. So 20% downside for 58% upside. Realistically, this is our initial target because the way this has been underperforming, it's probably going to continue underperforming. So there's no trade setup there. That's a coin toss. So we have to take this trade setup here and say, hey, look, if we lose the 21 on the daily and that previous swing low, 7% stop loss, 20% upside potential, almost 3-to-1 risk reward ratio. So that's your trade setup. If you're like just desperate to trade this random trash crypto. And then obviously like if you want to get excited about something, that's what it is. It's the retest of the 382 macro and the 200 exponential and simple. I would think this makes it up to the 236, but I mean, I don't know. Maybe it doesn't. Absolutely pathetic. It's absolutely pathetic how badly cryptos are underperforming and somehow the couple that are performing are taking market cap from Bitcoin. It just blows my mind. It almost doesn't make sense. But then you're like, well, it's crypto, so it's trash. So you would expect that as we go lower, people get more bullish the trashier the asset is because it's crypto. In the rest of the world, it doesn't work like that. I take it back because profitless tech is essentially just like, it's basically just like stock market crypto. And you're like, yeah, but if we don't make money for 25 years, eventually we do make money. We'll have put everybody else out of business and then we could take advantage of them, just like Amazon did. And then you're like, well, how many other companies have like pulled off like the Amazon move in history? And you're like, you can count them on one hand. And you're like, oh, okay. So probability of your random trash asset that you think is going to look like and perform like Amazon playing out is like, it's like 1/100%, if that. Okay, yeah, that seems like a good bet. He lays on sarcasm thicker than he ever has in all of his streams. Already hit the 236 on bat. Looking a lot like an inverted head and shoulders. I mean, having some real difficulty getting above that 236. If it does, it's going to backtest the 382. 382 lines up with 200 exponential and simple. Seems very likely that this is what we're setting up for. It's had like 10 chances to break out and has failed so far. Again, support would be like these swings right here, 12.5%. Target to upside would be the 382 and also 200 exponential and simple, 35%. It's like 3-to-1 risk reward ratio. Bare minimum we would take. It is what it is. We'll see how it plays out. I have a small position in BAT, but I'm sure it just breaks down and goes to zero because all these cryptos are trash. And considering the moves we've had in some of these lately, like, I shouldn't be as bearish on them as I am, but they are just, like, honestly, just pathetically underperforming. with the exception of basically Ethereum. Every other crypto is like pathetic lately. So Chainlink, half this trade setup is played out already. Again, still just very, very pathetic underperformance. If we take a swing from the all-time high and then from the local high, technically we hit the okay, so we bottomed here, tapped the 236, double bottomed, came all the way. We're still not back to the 236 yet. So you would think if it's going to go to the upside, it's going to go to the 382. Target is just this initial back test of the top of the channel, possibly 200 exponential and simple. We'll see what happens. Again, not super excited. Anything that's taken this long to play out, like a counter trend trade should be like fast, aggressive, big percentages in a short amount of time. A counter trend trade should not just be like a slow grind for like months and it goes up like 20, 30% and then, is still down 90%. No, that is not good. That's not what we want to see. So somewhere around this range, obviously already in this trade. We'll see how it plays out. Again, completely underperforming. Matic, by far one of the best looking cryptos. Still very bearish, below the 200 exponential and simple, but playing out very nicely. Again, just like pennies off our nut over here for that most recent 50% trade setup. Could it go higher here? I mean, again, this one's overperforming basically anything. It's one of the few cryptos that's actually backtesting the 200 exponential and simple on the daily. So whatever's happening on Matic, whatever the fundamentals are, or whatever it's like popular now, whatever the cult reason is, it's one of the better ones, one of the best ones. BNB also, again, we have this ascending channel, pretty aggressively been operating inside this ascending channel. We talked about the potential of the breakout. We basically closed above it 2 days ago, got the push up afterwards. So at this point in time, confirmed breakout, obviously. Not a lot of room left for this thing to run. The target was obviously 200 exponential and simple, which we're basically at. So again, BNB looking pretty good in comparison, but just a quick little reminder again, BNB is the scariest chart in crypto, in my opinion. If we switch over to the monthly, this just absolutely disgusts me. There's a single monthly candle on BNB from $44 up to $209. And $209 is the Adam and Eve top pattern neckline. So if we do break down from 209 or whatever, fully expect a single monthly candle to look like this and take us to the 40s. Now, it doesn't have to happen. Maybe we find support here and we keep trending higher and everything is gravy. It does not have to happen. But I would just be very, very careful with BNB and make sure that you are protecting yourself from potential downside risk. All right, and then last for the day, we have Atom. Oh, AMP. Okay, that's what it was. AMP token. You're right. Yep. That's the one. All right, so Atom, we had some clear resistances. Those are from a long time ago. I'm going to remove all of that. We'll just do our basic bottom to top pattern and then top to bottom pattern and see what we got on these fibs. So from bottom, which was March of 2020 at about $1.10, and then top was our double top right here, September 2021 and January 2022 at about 43.50. And then since then, we back tested not quite the 236 a couple times, and then finally hit the 236 here, broke down immediately to the 382, through it, back tested it, consolidated, through the 0.5, back tested it, consolidated, back to the 382. So basically, we're at a key pivot point right now, which is the 382 fib. So the next thing to happen is we either come back down to the 0.5 or we shoot up to the 236. So we're not going to have a nice trade setup here because it's basically going to be a coin toss. Because if we break down from here, it's 36%, 35%, something like that. If we break up from here, all the way to the 236, it's 70%. So that's a 2-to-1 risk reward ratio, and it's counter trend. The minimum we want is at least 3-to-1 risk reward ratio. So you have to start looking at like the swings or the pivots if you want to buy like a momentum into a momentum trade. Obviously with the momentum trade, probability of success is not great, but you don't have to worry about like those deep stop losses in the same way. I would be looking at something like this. We basically have a leg down, a bullish consolidation, and then typically we break down with another leg to the downside. Now, in the meantime, where is that going to take us to? Well, we know we have our target up here, 200 exponential and simple, and then also the fib. So if we wanted to do a continuation, obviously it's better if you're just already in this and you're just looking to take profits, basically see where this tops out at, etc. But if we were looking for a potential trade setup, you could take the most recent swing, or you could take the swing before that. If we broke down from that most recent swing, we would be breaking down from the channel. So I would really be looking for like the potential that this move is, we're breaking down from the channel and we're getting ready to put that big leg in to the downside. So we're basically like squeezing in an ascending triangle right here, where we have like a flat top, which is the fib, and then we have like an ascending support, which is the bottom of the channel. So you would think we squeeze long enough and then we break out to the upside, and the breakout to the upside would basically be back to the top of the channel, somewhere around like 14.20, but obviously we expect slight continuation. So you could use that setup, 8.7 stop loss, 53% upside. I would arguably be looking for the top of the channel first. So like 8% stop loss with 26% upside is about 3-to-1. I would look at that as like my initial take profit. Not crazy to think it goes to 200 simple, exponential, or the fib right here. But always, in my opinion, a good idea to just lock in some gains when we're trading in a range. Once you hit the top or bottom of that range accordingly, you want to assume that we just continue trading inside the range until we don't. So in this case, I would try to lock in gains on the initial trade setup, at least part of the trade, or at least, move my stop loss up once we put in a new high. So we'll see what happens. There's some potential here. I wouldn't get overly bullish on this just yet. If we do our fib from the top to the bottom and just see how that corresponds, we're going to see some levels of confluence. We'll turn that one yellow. Move the green one just over a little bit out of the way. Tighten this up a little bit. We want it to be tight like a tiger. Oh yeah, that's the spot right there. Nice. All right, so we see obviously we have our 382 on the green fib. The 236 on the yellow fib was resistance, support, up, back test that support. So we're definitely seeing clear confluence, or clear respect of both the green and yellow fibs. So the next likely target to the upside would be our next fib, which is the 382 in yellow, which is 1239. And then again, we'll see the 0.5 in yellow comes in right at the 200 exponential. So maybe we should just say like, hey, that's probably actually slightly higher will be our target. And like the top of the channel lines up with the yellow fib, 0.5 lines up with the 200 exponential all around that time. So that seems likely. Maybe we get a push up, something like, something to the equivalence of like a push up here, then a back test, then a breakout, then a back test, then the move up here, then we kind of consolidate around a little bit, then maybe we get the, something like that. So we'll see what happens. Obviously, borrowed time whenever we're in a pattern like this, because we have a leg down, we have a bullish consolidation, and then statistically speaking, there's like 66% probability we have a leg down. And we know typically when we have these legs to the downside that the lead in, or the whatever you want to call it, like the flagpole or whatever, is likely going to give us the next breakdown. So depending on where we break down from, or where we peak out at, let's just say we hit the 200 exponential and we top out right there, our next breakdown leg is going to take us, and then arguably you could say, well, really the leg should be from the top here to the bottom there, maybe from the swing, whatever. But realistically, somewhere around these levels. Macro, it looks like we're probably going much lower. Short to medium term, there's probably still some room to run. And arguably, there are some decent like continuation trades with tight enough stop losses and bullish enough targets that there's some potential here. But again, all of these trade setups, every bullish trade setup we're taking right now, we're taking with like that like hourglass in mind. Just thinking like, okay, the longer we're in this trade for, the more likely it is to fail. because eventually the predominant trend, which is bearish, will take back over. So we really want, like, the best case scenario on these, and pretty much always is like we take a quick little scalp, it plays out in the next 2-3 maybe like days or week, and then we take profits, get back out of it, and let the market like reset. Or we take those profits out, leave a little bit in play, and then we put that into another trade setup that hasn't played out yet. So the same way we like took the Ethereum trade first, took profits on that early, and then moved into some of these trash bag shitcoins, that's the same thing we're doing here. Like we got our trade setups played out and some of our better like indices, etc., some of our better stocks, things that actually make money, and then we move into like some of the more like speculative things, etc. So, you know, the further we get down the risk curve, the trashier cryptos we're betting on or less profitable stocks we're betting on, the more likely the setups are to fail. So obviously, as we see the markets develop, you know, if the S&P and the Dow Jones take another leg up, probably then we get the trash setups to play out. If the Dow Jones and the S&P start rolling over, you know, realistically, these trash setups that haven't played out yet are going to, you know, roll over and probably much worse. All right, so we did it. We made it to the end. Yeah, 2 hours and 36 minutes. Oh, shit. God, this takes forever. Not bad, though. Deep dive on a bunch of stuff. Talked a little bit in the beginning about some of the fundamentals, some of the important things on like the slowing of the economy and inefficiency of expanded government over time. We know, obviously, the bigger the government gets, the smaller the private sector gets, and the smaller that the private sector gets, the less likelihood there is for like gross domestic product expansion or, you know, real life growth. We can pretend that we're growing as much as we want, but when we're growing because 50% of spending in GDP is government spending, that's not real growth, because government doesn't have any of its own money. There's only two ways government gets money. They either tax it from you, like blatantly with actual taxes, or they run a deficit and they tax it from you like nonchalantly with inflation. So forever we've been getting taxed regular, and now we're getting taxed regular, plus we're getting stealth tax through inflation. So if you think right now that what the world needs to get better is more government, and we need to fund the government more, we need to tax productivity more so that the government can spend more, therefore we can grow, just go ahead and just transition into just something different, because like markets and economics and macro stuff is just not for you. It's just not for you. If you think that going into the future, the world is going to be more productive if we work 4-day work weeks instead of 5, 6, 7-day work weeks, just go ahead and look for a new career or like hobby or whatever, because you can't grasp the basics, you're never going to get the complicated stuff. So, and I know you guys are all fine, but who knows who's going to listen to this later. So, so that being said, obviously getting ready to close up the week here. Saw some big moves here. You know, had a really nice July. Now we're into August. Looking pretty toppy or pretty bottomy on a lot of things. We'll see what happens. Weekly close is going to be important. What happens over next week's couple weeks is going to be important. But to tell you the truth, like, are we just going to kind of bounce around sideways and some stuff goes up and some stuff goes down, and then we just hold our breath again for the next like CPI and then the next Fed meeting? And yeah, I mean, we really are. We really are. I mean, there's basically like, I mean, the Fed is the only thing that really matters right now, as pathetic as that is. Like earnings, it's like, oh, cool, we got some earnings. Maybe we get a little pop to the upside, but will it be sticky? It's like CPI. It's like, oh, we got CPI numbers and they're not as bad as we thought. So maybe that's like bullish because, you know, inflation's coming down. And like, oh, look at the jobs numbers. Like, but really none of that matters. Nothing else matters right now except for the Fed. And arguably you'd be like, well, the Fed is always just all that matters. Well, sometimes, but not like now. Not like now. And to tell you the truth, in my opinion, the market is the most offsides it's been in literally years. With all of this talk lately about the Fed pivoting and like rate cuts or no more hikes or a pause or whatever, I literally will bet, I'll take the other side of that trade all day. I bet right now, I will bet that we see minimum with, I would say, let's say with 90% certainty, the minimum rate hike we see is 50 basis points. And like, honestly, I would say there's still probably at least like a 75% chance that we see 75 basis points. Okay. And I would say there's a less than 5% chance that we get a 25 basis point hike. And I would say there's a less than 1% chance we get no hikes at all. I mean, something crazy would have to happen to get no hikes. And with a 1% chance or 5% chance, whatever you want to say, for 25 basis points, who cares? I don't give a shit what they hike. Because I'm going to tell you right now, if they hike 25 basis points, it's a confirmed breakout on the Fed funds target or effective rate from the 2018 highs. And that's a confirmed breakout of a 40-year downtrend. And in my opinion, that's when the market has to say, oh, we were wrong. I admit it. Because that's really what it is. It's the breaking point where the market says, oops, I was wrong. Right now, you could argue, well, technically, we haven't broken out yet. Technically this, technically not. You can make a lot of arguments. But once it's clear, once we have that clear defined point where it's like, okay, I was wrong. And in this case, we are right and the market's wrong. Once we get to that point, there's no denying it. The bond market, the stock market, anybody that participates in these markets can no longer look at a chart and say, well, I mean, technically we broke out, but like, are we really going to count it? Because it doesn't really fit my agenda. So we'll just say it was an anomaly and we're not going to worry about it. That's the only thing you can say at that point in time. And that's just straight up delusional. So we'll see. I mean, this next rate hike is the most important one because it's the technical breakout. So 25 basis points, I don't give a damn. I don't think it happens, but literally the only thing that can stop that happening at our Jackson Hole meeting is either zero or, a complete pivot and rate decreases, which is just not going to happen. We literally have not even reached. Okay, people forget about all this because they're like, oh, it's the quantitative easing, the quantitative tightening, the Fed pivot. Does anybody remember about the mortgage-backed securities and the treasuries that the Fed was buying? Did we forget all about that? The like 100 billion? Did everybody forget about that? Because now nobody's talking about it? Because if we remember a couple months ago when they started the program where they were going to start letting these roll off of their balance sheets, or they were going to start the reduction of the Fed balance sheet, not sell, they were just not going to buy back expiring treasuries and mortgage-backed securities. Well, they started that off at like whatever it was, 33%, and then it was going to ramp up to 66%, and then it was going to ramp up to like 100%. We haven't even reached the full ramp up yet. So we haven't even reached the Fed's target of balance sheet reduction yet. And that's expected to go on for what they said, something like the next 3 to 5 years. And even at maximum velocity, it's like less than $1 trillion per year comes off the balance sheet, and we got 10. So even if they run it for 3 years, we still have $7 trillion on the balance sheet. And we haven't even reached the initial target. And the initial target is really just us stepping up to what we plan on doing for the next 3 years. So for people to sit here and say the Fed is pivoting and like that was it, you're literally delusional or retarded. That's all there is to it. And maybe I shouldn't use the word retarded. Maybe you're just a moron if you think that. The Fed did not pivot. There's no pivot. It just absolutely blows my mind. But anyway, we'll wrap it up there. Just want to make a point of how everybody always thinks that the bond market is so smart. The bond market was wrong for the last 2 years and got absolutely wrecked. So the bond market's obviously dumb as fuck. So they were right for 40 years when everything was going in one direction. And then as soon as the direction changed, all of a sudden they're morons. So were they right, or were they just trading with the trend and unable to recognize when the trend changes? Because that's what's happening. The 40-year trend is about to flip from bearish to bullish or bullish to bearish, depending on what you're looking at. And a lot of people are going to be on the wrong side of that and get completely wrecked, completely wiped out. You know what? Not our problem. So we'll see what happens. But the pivot, the real pivot, is not the pivot people are talking about. People are talking about the Fed pivot. Well, the Fed's pivoted. The Fed already pivoted. They pivoted from easy money to tight money. There's no more pivots coming. Not anytime soon. So you want to talk about the pivot? You want to talk about don't fight the Fed? You want to talk about the trend? You want to talk about all that stuff? Well, make sure you're talking about the right side of it, because a lot of people are on the wrong side of what is happening and what's going to continue happening. So we'll see what happens. It's possible that I'm wrong. We have clear areas of invalidation, and that's completely fine. But there's also a really good probability that, in fact, like, we're just going to be right again. So that being said, going to go ahead and wrap it up there. Appreciate everybody that tuned in today. Hopefully you guys enjoyed the stream today, got something out of it. Make sure to like and subscribe. It is Friday, 1:45 p.m. Eastern Standard Time on 8/5/2022. And that is it for today, our weekly market wrap-up. Make sure you check out our live streams every single Sunday and Wednesday from 8 p.m. till 10 or 11 p.m. And, of course, on Fridays, thanks to the member contributions and support, our Friday streams every single week from 11 a.m. till like 1 or 2. But that being said, we're going to wrap it up there. Remember, none of this is financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. We know exactly what we're looking out for over the weekend for our Bitcoin spot markets. We have some key levels identified on the 4-hour as well as the daily. And essentially, you know, what levels need to be maintained, what swing lows need to be maintained, and what is likely to happen if they're not. We have targets to the upside. We have targets to the downside, and currently have some open positions, taking profits on some along the way, but we're going to let our winners run just in case we are wrong, and we see continuation, bullish continuation in some of these. But that is it for today. Appreciate everybody tuning in. I'll see you guys in the group over the weekend, and that's it. Crypto Trend Trader, and I'm getting the F out of here. Everybody have a great weekend. Make sure to preserve your principal, protect your capital, lock in those gains, and of course, it's all about that position sizing. Peace, I'm out.